What is going on, traders? Good morning. Happy Friday. I hope. As I just get on the NASDAQ contracts here and stop out. See if we can get a little more long in this area. Give it a shot. Hope you guys are doing well today in this volatility. Let's see. Let me get this treadmill up to speed. Golly. Well, they got him. Okay. Well, we'll try here. At a major level. So, you give it shots. And you try again. See if we get any kind of reversal off this major zone of mine. So today, good evening, Trader Tom. Today, I've got a 5-minute chart up here on the left, a footprint chart, and a 1,000 volume chart. With a little bit of heat map up. And most importantly, I have my espresso off to the right here. Oh man, and it's good. It's very good. Oh yeah. Alright, I can tighten this chart up here. And tighten this one up. Target about the 38.50 on the E-mini here. We will see. Building lots of volume here short term. And I mean lots of volume, which is a great thing. That's what you want. You want a little capitulation. And then the market can scream. What did Gabby have to say about me, Gusa? He said, Mike probably said something like, Mike's a good trader, but he's a hothead. Maybe. Something like that. And if he said that, I am not going to deny it. I'm not really a hothead, but, he's probably said something along those lines. I can be a little bit difficult sometimes. I'll admit it. Here, let's Bing. All right. Still, he's a great trader. Bum, ba, 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 ba. Come on. Come to Papa. Come to Papa. I am walking on point. Bishop? What? No, it's not Bishop. Not Bishop at all. My last name starts with G. Mike G. Anyway, if you talk to him, tell him I said what's going on. Gabriel, hope he's... Oh, I already know. He's a good trader, but I hope he's doing well. Yeah, I've got this microphone turned way up in terms of sensitivity. Um, so yeah, I'm drinking espresso, and I'm also, hold on. Manage it, manage it, manage it. Come on. All right, now we're short 2. Now if it comes back up, now if it comes back up, you don't want to be short. But into this area here, you might want to be long actually. Right onto that node for a little pop. Pop it like it's hot. Up to 76 and above, potentially. We'll see. Right. Building volume up here above this prior node. Little liquidity at the lows down here on the E-mini, or on the NASDAQ, I mean. We just snapped it up. You could see it here. Right there. There's the liquidity that just filled. Let's see if they buy it above highs now. Let's see what happens. Someone is getting fills here. Sometimes you get the stop run. Excuse me. And then it comes back to the upside. But we'll see. So these are micros. These are MES and MNQ here on the screen. I'd consider this time of day to be the chop zone. 9 a.m. my time, a little bit of the chop zone here. You can see on the E-mini here, right down here, look at all this liquidity that filled. Right, more liquidity filled down here. So for us to range back up to that liquidity into this area, at least test the big red dot, which we've done a little bit of, would be not surprising at all. At all. So, yeah, kind of a tough spot for a lot of people to play. Market's trended down for a while. Not very many people want to get short, which could be, I guess, a reason to get short. But I think after this kind of weakness, there's also a group of people that don't really want to get long. So sometimes when you get about this much movement, it gets a little more challenging in terms of, you know, trying to calculate your risk reward on trades. What are you using to get long and short on the intraday swing time frame? You know what's interesting is that the E-mini has got this nice little ledge here. It's still, the NASDAQ has pushed lower into this big volume node. So it's a little bit different. Just a little different. They might go get my stops on the NASDAQ. A little bit weaker. Yeah, pushing down. Pushing down. And it looks like it's going to keep going. New lows by a tick. Let's see. Come on. Right into that volume node up there. I should have flipped it for a short scalp, but you know, can't always get what you want. Hey, Brian Davila. Trade now to provide liquidity, says Ben Fishin. Yeah. Oh, sorry to hear that, appraiser guy. Hey, it happens to the best of us, man. Getting beat up in these kind of markets. It happens. It happens to all of us, my friend. Look, you gotta sometimes just hit the ask sometimes to get any kind of fill. Sucks. Anyway, Brian Davila says you're really great at explaining your thoughts and the things that you see. I appreciate it. Hey, I appreciate that comment, Brian. What up, dog? G Trader. Good morning, Raymond Dixon. Raymond R. Dixon. Let's see. I love how Gusa says, you can open on big screen the ES. I know it's a language barrier, my friend. Like, you can do what I want, if you want. It's the way you present it, huh? It's like, you can do this. By the way, you have permission. You really mean to say, can you open it on a big screen and just focus on the ES for me? Because that's what I'm trading, I think. Is that what you mean, Gusa? That's alright. I think it's a cultural thing, right? Might be a cultural thing. It's all good, man. Oh. One of these days I'll get my mic output right. So what do you think? Short term here, right? How many traders are going to cover their shorts if we break this lower high candle structure right here? How many traders? So what typically happens on these things, right? We go up here. We find all the buy stops here, right? We find all the buy stops, and then everyone gets bullish. Oh, the lows are in, right? You notice now, see how we see the structure here? So there's short-term buy stops above this level. See that? Those will propel us for a little while. And then there's buy stops up here too. Just saying, this is what happens. Notice how this trend line doesn't work out because this is a volume bar. You see that? How the red trend line on the 5-minute bar, which is time-based, actually lines up, but here it doesn't. This is not a time-based chart. So horizontal levels of support and resistance you can draw all day long, but trend lines, you got to just ignore them. FYI. One reason to have time-based charts. Anyway, what we're looking at here is the 5-minute of this NASDAQ. You see how we could just let this trade go and talk about other things? Well, that's what you do in trading. You just distract yourself when you want to watch every single tick, right? And we're out. Anyway, now we have this trend line up here. Line style, line width 2. There you go, nice and thick. Whoa, that's interesting. Think that. There we go. Delete. There you go. Two spots for liquidity here. Right here and down here. A little below. Yeah, we're going to give this a shot. One, two, still lower highs, but this NAS has a squeeze bar, kind of, almost going, see? Yeah, a little bit. We'll see. We'll see if it spits us out in liquidity here for wrong short term. Put our stop about yonder. There you go. About there. Six. Might be time to go get these stops. We'll see. But look at me, stops in the most obvious place, right? Right underneath the lows. Would you expect it to go get it? Yeah, you would. But, well, we're going to play a little oscillation game here with defined risk. Let's see here. Building volume at these lows here. Building volume compared to this short term. Building the volume. Ran into a seller here at 40, 45, 75. Still building volume. So that seller is still there though. So whoever's doing this de-risked right into this zone. You see that? You can just see the little divot here. Very quickly, as it popped, they were icing. Very quickly. You know what they say, watch every tick, trade like a you know what. G-Trader, Lord of Skies. I'm happy to hear that. This is and thank you for the nice words. Let's see if that ice is gone. Yeah, and now they've got a little bidder here. You see the 95 lots? You see that? He just went and got smashed. So that was 119 lots or so. 120 right up here. Right, I see how he popped up. This is MBO. So size. So let's see if this size player now has absorbed your sells in the short term. And if we go smash, I'm not super confident about this little zone here. There it is, 400 lots. The 400 wants in. There you go. They're going to go back and get that 400. 196 left. 77 gone. Whenever you have liquidity pop up like that, they go back and get it to the downside. Let's see if they go punish this player under the lows now. Not under daily lows, but this low here. So you guys should have seen it, right? I'm watching the same thing on my DOM as you guys are watching here. You know what? The refresh rate on this chart is really good. So you guys will be able to see what I see on my DOM almost if I zoom in like this, right? And now you can see this activity here because my chart refresh rate on this footprint is very high, beyond what Sierra Chart recommends. But again, I'm on Linux, so I can do it without any problems. So just letting you know. Excuse me. All right, I'm gonna read up on comments because I'm behind. Hey, King Harrison, that's a nice thing to say. Thank you. Appraiser guy, no, I don't. I am not a data scientist guy like some of you smart folk. I don't spend that amount of time. I'm more of a, I'll back test it for hours and not even run anything with any programmatic idea or anything. I'll just sit there and spend hours looking at how it behaves. That way I'm watching behaviors and then just seeing how it works in the market that I'm in, and then I'll take notes and stuff. But in terms of statistics, no. I mean, I'm just keeping track of, oh, this is working 80 or 90% of the time, or this is working about half the time. Throw it out, right? Or I can't figure out what the variables are, and it seems unclear to me, right? So very, very and this, I'm not suggesting it's the best way by any means, but very what's the word to describe that? I don't know. Subjective, maybe? Discretionary? Anyway. I love how GTrader says, and I'm not making fun of you at all, I'm just saying 3,400 is only 450 points away. But 450 points of 3,400 is a greater percentage than 450 points of 4,600. So it's a lot in percentage terms. Goosa's like, I want to compare my chart, the number and color. Can you be my personal help right now, TYP? Goosa, just go back later, pause the video, go back, find the times, pause it from an old video, and do it that way. But no, we're not all going to stop what we're doing just to help you, my friend. Goosa, you gotta have some common sense when it comes to asking these things. I can just ignore you all the time, but I don't want to do that. I'm spending a little bit of time to try and help you, have some consideration, but at some point I'm gonna start ignoring you because you're getting to that point where you're just distracting me with silly little questions like that. So maybe one more? Maybe that'll make you consider a little bit more. You get one more shot. Let's see. Oh yeah, thin volume at 34. It's possible. Yeah, it's possible. I'm gonna see what this weekend's this weekend's charting brings in terms of, you know what? Oh, my bracket is off. It's okay. Bummer. Let's see if they go get my stop. And continue on. They probably are going to go get my stop by the looks of it, but we'll see. Little balance breakout now. Hey Trevor, which would I read? One trading book? If you had one shot, one opportunity, that is a good question. I would probably read Adam Grimes's book. I don't know, he's kind of balanced. Here, let's lock it in. Bing! Into that volume node. It's likely going to come right back into range here. Quick rejection off the lows. They're building volume here. Building volume. Building volume. See that? You can see it in real time, right? Some sellers here. But the urgency to buy right now is quite high. This is the stuff ranges are made from, right? Little double bottom here, right? A lack of bid to ask volume ratio, right? This is the stuff we already had, sort of this capitulation area here, right into big volume. So, you know, long-term players absorbing. They've been on the book for a long time. Oh, I don't know. We'll see. Probably Adam Grimes's book. He's one of, it's, so I'm answering the question from the perspective of, if I didn't have knowledge and I had one book to read and I didn't have the great interweb and I don't know, given what I know about risk and larger picture analysis tying together with smaller, and given what I know about antes, market fakeouts, and how important understanding those, especially with something like a leveraged product like the minis is, I would say I'd read his Adam Grimes's book, The Art and Science of Technical Analysis. He very broadly covers a lot of important facets of trading, from psychology a little bit to risk management and how important it is, and then general broad market structure. He teaches you what is Dow theory, what does trend look like, on both small and higher time frames, right? How does the market often move, and things like flags, right? So what to look for in early stages, stuff like that. And he's just such a great writer and communicator that you could probably read his book a few times and get something that you missed because of his detail orientedness the first time. We're going to take one contract right here, and we're going to get out one contract on the retest if we get it. Nope. So far, no. Might still get it. Oh, there it is. Bummer. Too slow. I was going to get in. Not building enough volume here. Anyway, we're kind of zoomed in because I was wanting you guys to see the way the order book was moving a little bit. But see, right? Bid ask side. You can see the MBO, the orders, right? Oh, some size coming in right at the front of the book, right? Look at them gobble up the 50 lot here, the 10 lot, boom, hit. Now we got the 22, the 10. So from left to right, the 10 is at the front of the queue or position. Then it goes 22, 20, and then 10. They'll stomp it all out right here. It's nothing. You know, in terms of contracts transacted here, there's thousands, right? Let's see. Yeah, I mean, from here, there's 191, 237, 147. And people are worried about the 20 and the 10. You see that? It's like, and it shows just a little size here, right? Well, it's intention to buy, isn't it? Right? That's what the limit order book is. It's telling us clearly that I have intention to buy here, whether it's to cover my position or go long, but I'm clearly stating I have intention to buy, I'm willing to be filled. And that's where you use a little bit of game theory and you say, you ask yourself questions like, well, they're clearly stating their intention to buy, but do they have algorithms that have already sold? And you didn't notice them because they're icing it up for 10 contracts at a time at every level? Right? And that's where it's useful, is when you start to ask those questions. And you know, you're not allowed yourself to be fooled by the order book so much. So how does the order book actually help you determine direction is the question, right? So here we have nothing until more liquidity down here. And now we have liquidity coming in, 10 lot, 20, 10, 16, 10, 20, 10. Now, here's 125. Now, did they go get it? Probably, because there's usually a large player. That will go snap up that liquidity to cover some of their short position. So let's see. They're stacking it. They've gotten some of these fills. Now see how they go away? Boom. Then they come back up. Sometimes you'll see an order fill for exact lot, say 65. And then the 65 lot will come back and try to sell up here. All right. So these are fun little games, little things to watch. Look at all that liquidity here that filled earlier. Just it was a beautiful thing. Anyway, let's move this down. Oops. There you go. Now you see these 11 lot contracts here? See 25 and then tons of 11s. Every single day they've had these 11s. They've gone and filled them. Isn't that interesting? The 11s, see the 11s? See them? All the way down, look. 11s. A little bigger than 11, but lots of 11s in there, right? Market maker maybe? I don't know. These have gotten filled. Now, maybe not immediately, right? You can't use it to day trade short term, but you can note things like that and say, more often than not, what happens when you see this size on the book? Just ask yourself questions and then go research it. There's nothing that you can take from looking at that and say, I know what the future is. So don't get it wrong. Let's see. Good morning, Jonathan. Yeah, Adam Grimes, he has a free course, but he's got a book as well. Actual HC Meister, because the percent is percentage of depth, right, on the book. So I don't know, that percent of depth thing, I've not gotten it to work the way I want it to work. You know, maybe Ticino Trader has a how-to to get the market depth historical graph working. It wouldn't surprise me. He's probably figured it out. He's just smarter than I am, so better with Sierra chart. He probably has figured it out. So maybe he has some level 2 on his website. Probably does. All right. Bing. Now they're laying on it a little bit. Let's see. Little bit of volume here. Build in real time. I see there's people writing, and I'll get to your either questions or comments, but just watching this, because I may have an opportunity either way as this stop is about to fill. Yeah, there it goes. All right. Big ticks. Oops. Big ticks. I like it. What does the yellow part mean inside my bar? I don't see a yellow part. It's old. Hold on. Hit it! Can we oscillate this P&L up? Yes, we can. It's orange? Oh. So the orange is simply a high volume area here. That's all. Just high volume. I have a video on, hold on. Come on, don't do that to me. You can go a little bit more than that. The art of scalping. $400 lots, 353. Uh-oh. Are you worried about it? Are you worried? You're worried about the 400 lotter? I wouldn't. I would not be worried about that. Oops. No, I would not. Hey, some more shekels. 24 to 31. 7 times 5, $35. Make Starbucks holla. Let's see. So that's what the orange is. Okay, let me look at that comment since I think I'm all flat here. What are we up? 404, 50.53 points on 34 trades on MNQ, $800, and on the E-mini, 31 times 5 is $155 net. So 900, I don't know, $960, something like that. It's not bad. It's not terrible. Anyway, so you see how if you're really closely looking at this, you're losing perspective here now, easily, right? So now, where's the next volume node? Way up here at 3840, right? Now, go look at liquidity. Is there some liquidity up there? There is. There really, really is. So let's do this. Scalp a Chawea. It's alright. Do you think this bar is going to get a retest of this volume here? Maybe. Maybe not. I think so. So we go for more shekels. Little bit of liquidity up here. Let's see if the longs go for it. Notice, I'll stop out if we don't come down right now. Look. Stop out. I forgot about this. Bow, bow, bow. Slowly coming back. Slowly. You see that? Just ever so slowly. Yeah, that's typically if there's not a whole lot of willingness to sell, you're going to get some pop. So let's wait for some pop. Let's get out of that. A few more dineros here. Okay, let me go back to the comments. See if I can pay attention. The comments are now really close to the DOM here. All right. Oh, bummer. Did it again. Really? Where I want to be in is from about here. That's about where I say, oh, I kind of like that. So just FYI. Bing. All right. Scalp, scalp, scalpity scalp. More scalping. Oh, what are these down here? They should not be down there. Okay. All right, back to the comments. Anton says, I heard this is the place for epic AC/DC covers. That is the comment of the day. I don't know about epic. Maybe embarrassing. Word starting with E, not epic. Embarrassing. I may have, I don't know, shattered a nut trying to hit a certain note the other day. So apologies for that. And I know that my friend from Switzerland does not like, at least he doesn't like AC/DC. That's okay. It's not you, Dirk. It's the Rainer. Rainer's like, don't do any more music in the channel, please. At least he said please. That's okay. We can agree to disagree, Rainer. AC/DC is awesome, and so are you at the same time. We can have this dichotomy, right? And they can both be true. But you're a little less awesome for saying no music, please. But that's okay. I think he's told me that on Twitter. All right. Well, not the type of thing that we want to see here. If we're trying to get short, the market keeps pushing down. Bummer. What are you going to do? So sometimes you go and you look at a different chart and you're like, whoa, things make a lot more sense. So let's make things make a lot more sense here, right? Let's do this, and let's just look at structure. You see that? The low down here becomes resistance, right? We had a little impulse, consolidation, and then kept going. That was resistance. You could see it here on this 5 minute a little bit, but sometimes when you look at the 1000 volume bar, you get a little bit more structure, right? Because you get, all right, this filled here, came back, made, I don't know, 50% retracement, went all the way up, couldn't even get to this big passive order that was ripped, and then range out, and then boom, blow through it. They try again here at these lows, doesn't even come back into this resistive area, so it's weak. All right, and here we are right ahead of all this liquidity. Now we're testing the lows, rejecting. So maybe the spot in hindsight is this, but nothing wrong with coming back and going, okay, that's how the market's moving right now. Next time we come back to this zone, if we come back to highs, we'll probably go get stops into here, into 43. If that happens, right? So that would be the next stop zone. So let's see. All right, there's some buys, some market buying here, taking it up. Let's see. Hey, good morning, Shane. Media Brewer asks, is the MBO limit or market orders? So anything that is on the book resting is a limit order. It represents someone placing an order that's resting. And any resting order that anybody else can see is by definition a limit order. So a market order, by definition, is an order that goes into the system and transacts, if it's a buy order, at the best ask and above, so the nearest ask price, which is a limit order, or above until the whole order fills. Now if it's for one and there's 300 contracts sitting on the ask, he's going to get filled at one price. If it's two, let's say it's 3 contracts for a market order, and there's 1 contract at every tick going up, assuming nobody else in the world transacts, that market order will fill at 3 different levels. Now, something to consider. This is not really answering your question. No, I already answered your question, but this next bit is not directly tied into your question. It's just a little bit of information. On the CME, right, which is the Chicago Mercantile Exchange, it's where your futures contracts are traded. Those are the servers that have the matching engine for orders. The CME only allows stop limit orders that are the price, that are defined by the price protection limit. You're like, well, that's a mouthful. So the CME doesn't want to see market buys and market sells for 30 points up and down. They want to control that volatility. And so what they've done is they say, all right, when you enter your stop order and you say that stop order gets out at any price, right? And in your mind you think, I entered a stop order and I just want that thing to get me out at any price, right? In your software, you just might see market sell or stop. When it goes to the CME immediately converts it to a stop limit that is defined by the price protection limit. It's a banding amount that's based on volatility. And right now it's 3 points for the E-mini. So in other words, CME converts that order immediately from a market order to a stop limit order 3 points above the, let's say you're selling, right? You have a stop loss to sell. It's going to convert it to a stop limit order 3 points above the best ask price. So what does that mean to you? It means that if some monster comes in and sells or buys the market 3 points above and then immediately has another buy order, or someone else has a buy order that gets triggered, let's say 2 points up, and your order is now not triggered, let's just say it's not for whatever reason, like your stop is 1.5 points up into that monster buy, and then somebody else's is before that for a stop limit of 3 points. If your software isn't smart, you could have a 4.5 point market sweep, and your stop is sitting there not executing because it's a stop limit 3 points from your stop. So it goes into the system and it just sits there and doesn't know what to do with it. Do you guys remember during March 2020, maybe February, where Peter Resnicek was using TD Ameritrade and he was trying to get out of orders, and because of the crazy volatility and the way that the TOS handled futures, it wouldn't resubmit the orders, right? The market already moved way more than 3 points away, too slow. And he was stuck trying to cover his 10 lots or 20 lots, whatever it was. And he's like, it's not working right. We had a problem, right? What happened is this scenario where the markets moved in volatility too fast away, never retraced, and his software isn't resubmitting those orders. It's just hung there. So it's not sending another message to the CME, cancel those orders and resubmit quickly, right? All in a split second of an eye, right? Good software should maybe do that. But then comes the question of, do you want your software to do that? So understanding the way CME submits orders or converts orders, and Sierra Chart Engineering is very good about this. All these noobs come on the support board and they're like, my stop never filled, and it's volatile. There's volatility, and they're thinking there's a problem with Sierra Chart. So they're like, my stop never filled where it was supposed to fill, and then Sierra Chart goes, look, these are the order types on the CME. They don't explain all this that I just explained. They just go, it's up to you to read, educate yourself, and do the right thing. Figure it out. So anyway, I don't know. Maybe something like Trade Evade or any of these other sort of browser-based CQG, maybe they are a little more sophisticated and resubmit your order because they realize it's not filled. But then you got the purists who say things like, hey, I wanted to behave exactly as the CME legally says it should behave. You shouldn't be resubmitting my orders for me, right? But if you're dealing with a lot of people in volatility who don't understand this, what's going to be more headache for you? Doing this little thing behind the scenes where you resubmit the order to get the intended consequence, which is I want to get out of my position at any cost because I don't read definitions on the CME, or we're going to satisfy some small subset of traders that understand this and that want to be stopped out at precisely that level, and if it goes against them, they'll add to it. Probably the former, right? The first set of instances, right? Where you want to satisfy the greatest number of newbie traders who don't know this. So, from the perspective of the software and those who are routing, you may want to consider the price protection limit and resubmitting the order, right? Just so you don't have as many people going, my order in volatility never got executed. Anyway, it's a rarer kind of thing, but it does happen, right? So you got to be aware of that. And that's why server held orders are important. It's a little I don't know. It's a little it's kind of connected to this idea, right? Which is that you want your protection on a server that in theory is online and more stable than your own internet connection, right? So, and this is why a lot of really big time traders use co-location with the CME, and they execute through a terminal. They rent a server that's connected because they don't want to rely on their crappy little Comcast or Xfinity internet at home that goes down once or twice a week or every month. Or if they trade from home, they have backup internet. Maybe they tether it to their phone, right? Or they have to be trading on a platform. They have to have another platform and another account to be able to hedge off, like CQG with the good mobile app. Because, you know, Sierra Chart has the web interface thing, right? But we all know that's not, it's garbage. I've used it. It's garbage. Like, come into the 21st century and create a mobile app or a browser-based app that, number one, updates in real time, and number two, doesn't look like, you know, it's powered by mice running in a wheel. I mean, come on, just let's all be real about that. It's a joke. So that is not even any kind of fail-safe, right? You got to I got to call my broker to get me out of a position if the software crashes. Otherwise, you go on this web browser thing. You got to select the right thing, and then it's not updating in real time, and then you got to select the right contract and select the right account, and then in some cases select the right routing. Oh, because they've left, right? Wrong servers up there connected to wrong routings. Oh, you got to know to change that, right? It's just nothing is perfectly automated and just works, right? So they allow their users to mess it up. So you can only hope that they hire somebody to create a simple mobile app that, you know, when it's on, it turns off your data for Sierra Chart on your desktop, right? And that way you're not sharing data, right? And violating CME rules about data sharing, etc. But that would be coming into the 21st century a little bit. They're not doing that yet. All right, great software, but they're not doing that with the mobiles. And part of the reason why I do have a CQG-based trading account, because they have a good mobile app, and I could do it from my phone. You know, God forbid my crappy Xfinity goes down, I'm good, right? So another reason I have battery backup here. Thank you, Brian, for convincing me. Not too recently, or not too distantly in the past, to do that. But I have a battery backup. It's for the same reason, right? If my electricity goes down, my internet probably isn't down, I can still trade for 10, 15 minutes. I can close out positions. I can do whatever I need to do. This market is about to flip to the downside, I think. That's what it looks like. By the way, I stopped out of that micro trade for a big loser. 80 points. It's on Interactive Brokers. Remember I said I was 20 micros long from 12? I'm out. They got me. You got to take the stop. If you're wrong, you got to take the stop. You can always live to play another day. Anyway, that's why I have a CQG account. That's why I have an Interactive Brokers account. That's why I can still trade futures on Thinkorswim, right? It's because I'm not going to sit here and rely on somebody that hasn't come into the 21st century and given me proper ways to access my account beyond calling my broker and saying, "Can you please get me out of position as the market tumbles?" No, this is not 21st century technology. So great desktop software, but they need to come to grips with the fact that everybody develops mobile or web applications for safety, for the sake of their clients getting in and out of positions. So bite me if you don't like what I'm saying, but if you're going to be talking about server backups and stability of routing and everything else, you need to be addressing the whole thing, not just Teton's great. So I think Teton is. It seems to be fabulous, but they need to address these other things. Um, Again, you can do other things. You can set this all up yourself, but you shouldn't have to do that through buying of remote servers and using a terminal and doing everything remotely and being able to access through your phone. I know traders that do that, but that is not the majority of people. So it is anyway. Andre, you said in one of your comments, man, Micah, he shares knowledge, but some of his rants, sometimes you have to mute him. I hope I'm not muted, Andre. It is a little bit of a rant, but you guys may have learned something. A good software would hide your order. Ben Fishin? Not really. It's not. Yeah. It's not really the way it works, Ben Fishin. Thanks, Andre. I appreciate that. I enjoy ranting once in a while, but I gotta do better. Some of my rants are just if I'm making fun of somebody or being mean or something like that, I gotta learn to shut it down. Martin Friends, yeah, it's 38.17. I am looking at larger levels. Bullard expected to speak today. In a few minutes, by the way. Short covering rally, here we go. Thanks, Dan. Appreciate that. I'm looking at a daily chart right now. Support on the daily chart is 37 today. 37.80ish. Interesting. Really, really interesting. NASDAQ is a little below where we are here. Yeah, NASDAQ is actually coming into support a little bit. Interesting. Big ticks now to the downside. There comes a point where you want to change your ideas about what you want out of your trades. Do you want a little bit of a swing trade into this zone? Are you looking for more, or do you want to continue scalping? You see I'm long, right? It's all right. We're gonna try again. Hesitating. We can get out. Try to get back in. All right, we're back in. Yeah, I think it's a matter of time before there's a short covering rally here. May go down further, but I'm seeing something here with the way some algorithms and some liquidity has turned on. All right, let's go again. Oh, shoot. That's irritating. I forgot to put my bracket order on, so I'm just going to kill it for a small loss there. Bummer. Anyway, you guys can't see it. There's the daily trend line that I'm talking about, this big red one on the 5-minute. That's where the daily trend line is. So typically what happens on these plays is that we do something like, I'm just saying, the typical move is that we do something like this, and then this whole area becomes super liquidity, and then we get a reversal. And it could be the stops are run under this daily trend line only to here or something, then we get the reversal. Lots of different ways for this to pan out. But anyway, that's the daily scenario that plays out often. The other one is that you get a slight gap here, and then you get the first bounce off that area. And we have Bullard coming up here. So that's interesting timing-wise, right? And then often this area, which was market slope, becomes sort of resistance. Maybe they go run some stops, go sideways, distributes, and then at the close they sell it. Look at me, I'm in a scenario. I'm plotting scenarios. I do this non-stop. As I notice, we come into areas that I've seen market behaviors before because I put lines on my chart. I've seen the way markets move into these areas, so I have scenarios. If this, then that. If this, then that. And it's continual. So one is gap, the other is below and reversal. Okay. The other is Bullard talking right now? Let's see. Hold on. Yeah, Bullard's already talking right now. Not much in this market. We're gonna get, who knows? Bullard could say something. Tip somebody can think they're tipped off and just start covering. But right now, it's more of the same. Go with trend. Sell it. If you're short, there's no reason to cover now. There really isn't. Let's look at it. You got monster liquidity up here on the NASDAQ, 11,574. Where is it? I'm sorry. Yeah, 11,574. Right here, 10, 50, 30. It's funny how you see it so easily here on the footprint. You're like, it's so far away. It's really not that far away. Sometimes I trick myself. All right. Where are the liquidity monsters? Hey, right here above 3,800. 3,805. 3,800. Let's go look here. All right, let's widen this MBO out, and we can see the actual size of these liquidity. Of these liquidity gods. All right. So there you go. It's not too much, right? 100 lot. All right, let's move this out here. There you go. 100 lot, 24 lot, 50 lot, 25 lot, 50 lot. And then here's the other one down here at 3,800. Let's see. How many people all have the same idea? 223, 100 lot, 20 lot, 91, 20. That's a little more. How many is that total? 658 for now? All right, let's keep going. Oops. Got that scale on here. Scale move. We'll see the 11s. 11, 11, 11, 11. Hello, market makers. You're first. You see, you're like, how do the HFTs fill before me all the time? Right here. They're filling for 11 and 13 and 12 and 11 contracts. They just provide liquidity at every level so that they're always guaranteeing a fill. So when we tick down, then tick back up, they're icing out. You're like, what? They're using an ice? Yes, they're using an ice to de-risk their 12 contracts at 1 or 2 ticks. BS, I tell you. No, it's not. They're providing liquidity. They're HFT monsters. They make billions of dollars doing this every year. It's the citadels of the world, right? So, but they're first, and remember, CME on order types, it's first in, first out, right? And everyone sits at the same tick level. First in, first out. Nobody gets a special place in the queue. All right? In equity stocks, the market makers can split the bid-ask spread in increments of pennies and make money on that. Make money on the, here we go, selling down, and make money on that spread, splitting fractions of pennies. In futures, they cannot do that. Okay, so this is why they do it, is they put liquidity on the books so they're first in, and then on any retracement, they can be first out. What? Yeah, that's how they do it. They expect this market to potentially keep moving down. So their liquidity providing in the direction of trend. So anyway, now it ends. 37.58 is where it ends. See that? What is this? What is 37.58? That's a big weekly level right here. 37.74, but they're providing it all the way to 37.60. Oh, a little bit none here. And then they start again. Look at that. Isn't that interesting? And then they start again. Look. Isn't that interesting, guys? One of you is going to add, for me to see this, you have to put a 10 lot up here. So if you want to add a 10 lot way down the book down here and have it show up on my stream, I'll see it. Right? If you want to go add 37.22 or 37.18, go add a 10 lot down there, I'll see it. Let's see. See if one of you is going to take the bait and put a 37.18 down there at 37.18. Let's see. Can any of you spare 10 lots? Probably half of you are able to pull, one contract for $500. So maybe you have a $5,000 account. All in! I could do 8. Oh, it won't show up. Only 10 or above. Anyway, keep looking. Keep looking. Liquidity goes away. Oh, hey, there's an 18 lot down there. Way down. Oh, weekly HVN. Balance area. Oh, boy. Now we're getting into the juicy stuff. Let's see. Anything down here? Any size? No. No size. You're like, how far does it go, Mike? It goes 1,400 levels. That's how far it goes, I believe. Anyway, back over here to the real-time price action. Satisfying my curiosity. Hey, how much are we up? 439. Let's see. Basic mode. All right, 439 times 2, 878 plus, what was that? 38.59 times 5, 1,070.95. All right, we're paying the electricity today in the TYP castle. Yeah, no, actually I don't wish I had a castle. Anywho, let's see. Bullard, 50 basis hike is a good plan for now. That's it, he says. That's all we're doing. It's for now, 50 is good. Sell it? Sell it? Is this what the market wants? Have to get inflation under control. Well, no ish. If you guys know what I mean by ish, it's S-H-I-T. No ish, Sherlock. Should try to get to 3.5% by end of year. Can be lowering your rates in 2023, 2024 if we get inflation under control. Ooh, he's saying by 2023 and 24 we might lower rates. The market is a forward-looking mechanism, but it might bottom, and then if things get under control, then maybe we see a reversal. Is it too early today to figure all of that out? We're just trend down. Yeah, it's too early. So anyway, let's see what happens. Let's see what happens. Live streaming mode. Let's see. All right, back in here. Any views on the RTY? Not really, Andre. Dirk. Dang it, Dirk. You were right. I should have this thing hooked up, but that's okay. You know, we have something here called PG&E, Pacific Gas and Electric. Jeez, they bonus. They just totally bonus for everything. So overpriced. My electric bill this month was $716. What do you guys think about that? It'd been working if you were talking shorty. Yeah, I know, Captain Hindsight. Advenus, his second entry worked from Pat's. I know people that love Pat's stuff. So, I don't know. Now, I don't know if they're long-term successful traders. I don't, because some of them are newbie traders and they just started doing this. And some of them are on sim. The ones that I really were exposed to, hi Maisie, and a few others, they haven't been doing this long, and they haven't been doing it with real money consistently for a long time. So anyway, I'm hearing Benzinga, and the market's buying. So it's an interesting little thing here. Did Bullard say something bullish? Maybe. Let's see. Yeah, he sees U.S. growth. So growth above potential inflation? I don't know about that. But about equal? I don't know. Some of the news bots liked it. And then you see the icebergs liked it too. You see that iceberg right there? Looks like the color of an iceberg. See that? High deltas. It's really high. 1,132 contracts iced out. What? Or maybe it was size. I don't remember. I don't know. So when you get distracted, you miss these things. I'm over here clicking on Benzinga and different things like that. Anyway, so I'm going to keep trading because I'm getting tired of talking about everything I'm talking about. Hey, Rainer. Yeah, well, every level that has transactions are buyers and sellers, right? It's our job to see it, to realize if one side is ridiculously wrong because they're capitulating, right? Essentially, right? Is one person saying, I've had it, I give up, I need to just get out at any cost, and is the other side just continuing to absorb, right? And then above their levels, they buy more, or the other side goes, oh no, I need to buy back in because I'm wrong. That's what we're doing, essentially, right? We're trying to figure out intent of the monsters, right? And then we're trying to ask ourselves, where might the monsters cover their position? Where might the monsters get long? And we're either analyzing it on a very short time frame, or we're analyzing it on a little bit higher time frame, 30-minute, or like a daily chart or a weekly chart, and then we're going, oh yeah, I see the monsters on the weekly. I might go into investing mode here shortly. But you know, on your footprint chart, which is what we're mainly looking at with 5-minute and 1,000 volume, we're trying to figure out, where are the monsters? Where are the monsters going to start buying or selling short term? And where might some of the retail traders who drive a lot of these moves, where might some of them start market buying to lose money? And then the monsters buy just a little bit. Not passively. They just take a little bit of initiative, and that little bit of initiative that they lean on against the retail people causes the market to go straight up and make zero prints. And then all the retail people exit at the most disadvantageous position. So that's all we're trying to do. Trap traders. Ay, ay, ay. I had one order that didn't have a bracket order, and that was my bad. It's alright, we can just do this. Alright, now we're good. E-Trade. Why is E-Trade emailing me? I'm not at E-Trade anymore. Oh well. Thank you, Andre. I appreciate that. Big sweep. Big market sweeps. See the big market sweeps at the 10 SMA? See it? Here's the 10. And they swept it. Foomp! Foomp! Big market sweeps. So, interesting. Hey, Panama, nice to see you here, my friend. Hey, if you guys haven't liked this video, please do so. A lot of times people show up, they don't like the video, and then, you know, it doesn't get very many more YouTube hits after the initial viewing. And then I think to myself, man, this is a lot of alpha for not even paying for a coffee. And I think, well, at least if I could just get something from this, then it's kind of, even though it's like inconsequential monetarily, it kind of does help with like feeling like, you know, people are kind of appreciating, right? And it just kind of goes back and forth. So that's, a lot of you guys are quiet, I get that, but if you just like the video, then I don't know, it gives me some juice, right? So I would appreciate it. That's what keeps me coming back and staying connected with you guys after I'm done day trading in the morning. Anyway, let's look. Let's look and see what's happening here. Any volume here? No, volume builds here, a little higher, at 29s. Oh, did we already get there? Yeah, we already got a lot of it. Let's see. Thank you, Andre. I really do appreciate it. We're just waiting here. Thank you, Raymond. I appreciate it. Those comments mean a lot to me, really. But the like and subscribe. Okay, here we go. We have all that liquidity up there now. All right, all right, all right. Oh, no brackets again. Ay, ay, ay. Really? That's okay. That's okay. We'll get out of the ones that have no brackets. How about that? Yay for liquidity, right? I think the rest have brackets. Let's see. 4, and then that one. So 1, 2, 3, 4. Yeah, the rest have brackets now. Okay, we're good. Yeah, Media Brewer. Grabbing me 30 points. I like it, man. Good job. Great job. Guess what? We can have this trade nice and risk-free here. There we go. Man, I wish I would have got like 10 little micros here. Would have been much better, but oh well. Sometimes you just don't get what you want. All right, we're out. Wait, am I still in? What the heck is going on? Oh, I am. Huh. All right, let's get out. Okay. Anyway, so cool, huh? Now there's liquidity here at 20. So do we go back to it, fill it in, and then go a little lower here to 18? It's possible. Let's turn brackets back on. You know, I have it on my Stream Deck to turn brackets on. You would think that Mr. Mike over here would use his Stream Deck better, but I don't. I don't use it so well. Anyway, top of this range now. See how this is here. This is why this stuff helps. All right, you guys remember what I've been talking about? BBWC, right? Here, let's just zoom out. All right, let's do it. It's such a good little pattern. So this is all consolidative. Then we have breakdown bars, right? From here, it tries. So you got to follow the story. Up to here, it tries again. Can't make a higher high relative to this. Look at where we sell. Trap traders through here. Oh shoot, am I about to get stomped? Oh no, I'm not. Okay. We sell through here, right? So now up to this zone up in here, you would expect if we come up here into this zone, you're going to have some trap longs. And then there's going to be stops. Now that we're coming back, this is 1, 2. Now we're coming back a third time. It's time to punish shorts, fellas. Ladies and gentlemen, that is what's happening here. Right? And you're like, what? No, I just want to buy and sell resistance. Well, you got to think about who's getting punished. Each time you rotate through an area, you got to punish both sides. You've got to induce FOMO the opposite direction. So here we go, right? Watch this. Let's see. So we're into the BBWC short-term resistance. Let's see if they take the longs and then if they rip it back to the upside. Or if they do it here. Let's see. I'm not taking an entry here. Yes, short-term, look, we're above these highs, right? So you got some stops. Some longs are still trapped from this breakdown. I get it. They're going to sell. They're going to let that happen. But liquidity is above this area. So we'll see. We'll see. This is the way I think about the market. Think about the market in terms of who's getting trapped where. What are they doing by moving it this high? Where would you get the most bang for your buck, essentially? If you want to get short, where do you trap the greatest number of traders? It's to go find short stops and to go break structure, right? So you see how using the retail mind could help you in this zone? It might. Oh, that's cool. Hey, Giacomi Music. Does anyone know? Can evaluation? Oh, that's weird. Yeah, I don't know about that. So X URL, you could just type in "trade your plan" on YouTube, and then you'll find all this stuff in like the recent uploads. Would you rather me talk about these markets or go find everybody URLs? They're right there, man, on the page. So I'm pretty sure. So I'm looking at TPOs now. We got a poor low setting up down there. You notice that poor low on the TPO, and now we're rallying off the poor low. Do you guys notice? Yeah. Sorry, I'm not. I don't have the URLs like right in front of me or anything, but it's like one of the last 4 or 5 non-live uploads. Do you guys notice on the TPO chart? Here. You guys notice here. Let's see. Look. Do you notice on the TPO chart here? We have a poor low, that dotted. That's the E-mini. See how we rally off the poor low? Why? Because all you market profilists are still stuck on the fact that poor lows need to break. You still haven't figured out that we've been gaming poor lows for a while. Because all of you idiots think they immediately need to correct. I figured this out a year and a half ago, that this was happening. And so I've been gaming it for a while. Now that I'm streaming it, talking about it, other people have been talking about it a little bit more. Still, there's books out there that people like to just take the rule from the book and say, poor low, gotta break. Poor low. It's the simple thing that I want to act on, that I understand. I'm going to go ahead and sell that. So what do? They give you a bar like this to get all your stops. Oh, like this. Look, right on the poor low. I'm going to get you. It's just what happens. Anyway. Back up we go. We're going to go get them. We're going to go get those stops up there. Yes. Yes, we are. Maybe. Who knows? Notice I'm not that convicted about getting those stops up there. Hence only 2. It's alright. I can have an opinion. Where are we going to get them? Where are we going to get them? Up above here? Into here? So 38.50? Yeah, maybe. That's where I'm going to target, 38.50. Yo, are you down to drink a beer? Brian Davila, you're all right. Thank you very much, man. What a good guy. That kind of shocked me. That's like the first time anybody's ever... I put that up there, not expecting anybody to do anything like that. So, yeah, thank you very much, man. I'm humbled. I hope the channel is helping with your trading. Where is the thank you emoji here? All right, back to it. Let's see what happens here. We're consolidating. We have now a trend line to deal with right here. So what's forming in real time is this trend line. We're still making lower highs, but we're making, now we have a trend line, and the trend line will now hold stops. So let's see. And notice on the volume bars chart that this trend line does not show up correctly at the tops. It's not a time-based chart, it's a volume-based chart. So here, this is where you put your trend lines, is on your time-based chart. So now we have a trend line. Does it break? And do we now go get all of this liquidity sitting up here on the MBO? Let's take a look. Here it comes. The highs are here. If you're going to buy it here, you might as well buy more. 122 lots. See that? That's 100. Boom, they're gone. Now what? Liquidity up here. Boom. Now our trail stops activated. All right, go pay us. Pull back into my orders. Come on now. Come on. Boom. Out one. Tightened up. Trail stop. Out two. So plus another 22 points. You guys can make money doing this on micros, I'm telling you. So it played out. So there it is, right? Above, they found liquidity. You see that? The resting liquidity was a magnet. And now look, they're bidding it up here. You see this? 53, 12, 30, 10, 22. They're bidding it up, right? Right into that liquidity. And you guys are all just hitting it, hitting it, hitting it. You see that? Ice, 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 baby. 1,000 lots up there. Someone recognizes that you guys are playing this game the wrong way. Look, 1,081 up there. You see that? That's ice. In real time, on the DOM, there was some low quantity reveal, and you just all hit it. And they absorbed you. This is why the game is fun. Think like the predator, not the little sheep. Anyway, hence why we try to think about trapped traders. So, Timmy, if you're out there, I hope you are. I talked to you one day about it's hard to think about the market from the perspective of the predator because you've never been the predator in, I don't know, futures markets, right? But you can think about the market from the perspective of the sheep, right? The sheep all what? They huddle in groups because it's protection, right? They all act the same way. They go over the cliff the same way. So if you know the behavior of the sheep, if you're a sheep because you've never been a predator, well then you can still understand this game. You don't need to think exactly like the market maker. You can think and deduce the game from the perspective of the hunted. And then think, how does the hunter play? There you go. And then you start to figure out, okay, this is where liquidity might be. So they found, so I should have taken a short here, but I'm over here talking. They found the liquidity here, right? They found it. And now it's selling. And then nobody wants to take a short, right? They're scared because of this big move. Is this just the pullback into support? That's what they're thinking, right? So now let's think about it from the perspective of where did those who bought, now if you want to scalp, where did those who buy this breakout or stop out, where did they stop? Do you remember? Here. They stopped out here, right? Right here. Look. That's where they stopped out. Where's the market slowing down short term? Right there. So if you want to scalp a few contracts up here and here, you can do it on a short time frame. They're gonna rip it back up and find stops, probably. All right, they did a little bit of buying right at the beginning of the candle. Shorts who aren't sure, so think about it from this perspective. Shorts who aren't sure, who shorted up here, and they aren't sure how the candle's going to form, at the formation of a candle that has a pin bar, most price action traders will think pin bar selling pressure. And so retail's on the other side here. Right away, they're willing to sell this. So if you're short and you're a big player, where do you immediately get out in the lowest risk, shortest time frame? You get out buying the beginning of this candle because all the weak players are there and you can just buy. So you buy into the pin bar to cover your big position. I'm not suggesting you get long here and stay long, but I am suggesting that at the open of a candle, if you can understand what just happened here, can you take a few ticks? Yes, you can. So these are little things that happen in real time, really fast. And you need to understand the context of the overhead supply and the players wanting to de-risk into the pin bar. It's interesting to think about it from that perspective, isn't it? Right? You see how you can game movements in the market in very short order? You can, just by thinking about it differently. Oh, are we still selling down? Sure we are, right? They found higher time frame. They found all the liquidity up here. But short term, could you have made this scalp? Absolutely. Now let's put on our auction market theory hat. Now, let's think about this. Volume into liquidity. Was there interest to transact here? Yes. Now that's the simple answer. All right. What's the layered, more thoughtful analysis? The more thoughtful analysis is from here to here. Yes, there's interest, but it's because there's anticipation of breaking and hunting these stops. Now, short term, if you want to sell this market again, what are you going to go break? You're going to go break this ice. Now, and I'm saying short term, I mean like intraday, medium term. Go break the ice, you'll find more liquidity, you're going to be able to sell 10,000 more contracts above this area. And there are monsters that are lurking out there. They will sell 10,000 contracts above this zone. And why are they going to push it back up through this zone? The pin bar. It's all the price action people. All the price action people are so confident about this pin bar, they get overconfident. But the liquidity, the interest to buy, whether that interest is short covering or not, it's still there. So if it's still there, maybe it's not just short interest, or maybe it is, right? That shorts are nervous. But there are people who get very nervous above this area, and someone de-risked up there into that. So if you're thinking about it and you're like, well, I want to sell contracts for more money, or for a higher price. Ultimately, I have a bearish view. Where do I want price to go? Yeah, I de-risked. Where do I want it to go? I want it to go to the place that hurts the greatest number of people. There's the ice, still there. Boom, above. Right? So you see how these pin bars, all the price action folk, they're like, oh, my pin bar, it's protective. No, it's not. We're predators. We'll hunt that because we know that there's so many of you Pats traders out there, all these price action people, all the Al Brooks of the world. So that game theory allows you to play the price action setups and use it against them. Anyway, it gets hard to talk about this stuff in real time because, you know, once I get on a roll, my instinct is to keep talking about it, but I still have to process, and then there are times where all of a sudden you still think you know what's going on, and you have to wait and gather yourself, gather more MGI, recognize, okay, we're now at, let's just think about it, value area low, okay, value area low, VWAP, a full 40 points higher, okay. Daily, we had the gap above the trend line, which was one of our scenarios. The other was find stops, then go. So now we have the rally. That was scenario 1 of 2 that I talked about. I don't know how long I talked about it. And it was, the idea is to probably rally back to here, and then what? To here, right? And now we're here. So you're like, now what's going to happen? Well, you have an opportunity to sell BBWC right here. Not specifically at this level, right here. That's the breakdown. Oh, look, we pull back from it. Okay. But you have more of an opportunity in this area to sell it, and this area. Okay, now let's go consider what's happening on the footprint. Rally, ICE, sellers, passive. Okay, remember, all the non-footprint people of the world, they don't see this stuff, guys. They can't keep, there is no way that most of these people on these retail platforms are keeping up with the order flow in this area. They're just not, right? They might see a volume profile, but they don't see tick by tick, right? So we have the advantage using better tools, okay? Look, let's zoom in a bit. Okay, so de-risking, profit taking, now we have some volume building here, right? Little P profile into resistance. Remember, this is a lot of volume. These are 1,000 volume bars. So every time you see a point like this, it's this big, here to here, right? That's 1,000 bars. So this is a chunk of every single candlestick is 1,000 volume bar. So this volume in terms of length is equivalent to the volume in length that transacted here. Why? Because each bar is 1,000 volume. It's not a volume bar in that it's not the Sierra chart volume bar that is wider based on more volume. No, it's static volume. So anything that's the same width is the exact amount of volume. Is that useful to see distribution, right? Knowing that from here to here is equivalent exactly to the next in terms of volume. It is. Look. It's very useful, right? So this whole area here, if the width is the same, is equivalent in volume to this, right? Now you can kind of track volume profiles, but you can track the volume within each volume. This is a volume profile, guys. That's what it is. You're like, what? I've never thought of it that way. Well, understand the tools you use. And once you understand the tools, now all of a sudden, you're understanding that, wow, I can use candlesticks and their movement to look at volume profiles. Yeah, you're essentially looking at mini volume profiles here because they're bars that print. One candle contains 1,000 contracts. All right, so if we want to do this differently, we can. All right, we'll click on a button and we'll go like this. I'll show you. All right, here's the volume profile. I don't know, it's about yay long. Right, now we can look at VWAP, value area low, value area high, and the whole volume profile for this zone. Okay, let's do this next one. Same width, What's that volume profile look? Oh, okay, VWAP for this. So here's what's interesting. Okay, you guys really want to start getting nitty-gritty on your analysis and getting better at what you're doing. This is a breakdown zone, right? From this area, it's a breakdown. From this, right, consolidates and then it breaks down. So we're including some of the breakdown. What's VWAP? Right here. All right, we tested the breakdown zone. Then when we came back up, just tested VWAP and VPOC, which was here from this short-term price action, and then rejection, right? So you see how this is another way to capture short-term rotations. Maybe this works better for you, right? Some traders like to use, like Trades by Matt. He likes to use, what is it? POC, value area high and low, right? I think that's cool. If that's, you're seeing it develop in real time for the session, great. You can also break it down further and look at it like this and break it down in each little area of the chart, right? Or you could look at, here, let's get rid of these. Delete them all. Okay. Isn't it wonderful having all these tools, guys? You just have to know how to use them. All right, let's zoom back out. That way we're about in the same area here. It's going to be a decent day on the micros. Let's see. 87. Oh, I'm already getting distracted. Okay. Geez, Mike, stay on point here with this market. All right. All right. You see this? This is these red lines here. Is developing value area low. That's what this is. Here, I'll move this out so you can see the whole thing. See that? VVAL, value area low, 3840. I like to see how it's developed. You could say like value area low is here and it extends the whole session, right? All the way across. Or you can see how did value area low develop throughout the day, and at any point has it become resistance? The answer is, in this trend, every time the market rallied and went sideways, look, here, let's change the view a little bit. Let's make it easy. All right. Here's value area low, the little dashes. So every time the market went sideways for a bit, it ran into developing value area low, and bing, this didn't even get close to it. Now we're close to it. Developing value area low. It just tried again downside. So you can play these value area lows all day long if you know to look for them, right? So what are you doing? You're like, well, I want to play for new lows. Well, you can do that, or you can turn over your edge from here to here and do it from here to here, back into the range. Now, if you want to hold for new lows, go for it. Every time you increase your risk reward to something outlandish, your probability of success goes down, right? There's an inverse relationship between risk reward and probability of success. The higher the risk reward, the lower the probability of success, right? The lower the risk reward, the higher the probability of success to a point. If your stop is too tight, you might get stopped out on noise and have a bunch of losers. But again, widen your stop, tighten your profit taker, you're going to win more times. The question is, when you're wrong at an 80% win rate and you have 3 or 4 losers in a row because now you got trend wrong, are you going to be screwed for the whole day, right? That's always the question. You got to figure that out. That's why, looking at market conditions, market general trend is important. You step back after having a series of wins, and you don't just keep playing how you've been playing. You step back and go, wait a second, what's the view of this? You know, I've been traveling into this valley. We'll talk about like Yosemite Valley or something. I've been traveling into this valley, hiking down this mountain, and I keep finding success. I'm rappelling down. But now as I get closer to this valley, I'm losing my bearings. Okay? The valley seems a lot bigger the closer I get. All right, let's stop rappelling so fast before I end up in the valley and all these towering sierras prevent me from seeing clearly. So this is what we're going to do right now. Look at that. Look what a $2 beer got me. Look at this. I'm all gung ho and happy about $2. I am. You know, I appreciate somebody that appreciates that. That's just such a nice feeling. Anyway, so we're coming into this Yosemite Valley. I'm not too far from Yosemite, so that's why I'm going to use it. And we're over here, and we're going, well, what's the market doing now? We're all looking at this trend. We're like, okay, let's get perspective. I do this in my head all the time, and I realize I don't talk about it enough with some of you people. Look, bing, bing, right? You're like, what? What are you doing, man? I'm looking at the trend, and I'm recognizing short term. Let's let the line width up. That short term, let's change color. Let's do more beer. You are well, thank you so much. I really, really, really appreciate that. Reiner, how was your beer in Old Town the other night? And thank you very much, Media Brewer. And all of you guys that are buying me beers and whatnot, feel free to ask me questions, either on Twitter or whatever. Tell me who you are. I'll help you. Because, you know, I help people for nothing. But if you show a little appreciation, I'm more likely to help in specific questions. Or you shoot me an email, I'll take a little bit of time. It doesn't matter that it's a little bit of money. I will absolutely, just because of the appreciation, pay it forward. It's just how I am. And I know other traders are that way as well. You know, I'm not going to say what I've done for other traders, but I've done it, and I've noticed, oh man, they were so nice to me after that because I just showed a little appreciation. So I'm not. This is not a sales tactics or pitch or anything. Feel free to not donate, guys. It's whatever, right? I'm here because of the interaction with all of you guys, and I appreciate it. But I'm just conveying my appreciation. That's all. So anyway, let's get back to this. All right. So let's select this and then change the color real quick. Man, Rainer, I swear I'm gonna visit one of these years when the babies are more grown up. I was talking to my kid yesterday about traveling, and he was like, "Daddy, let's go there now. Let's do it." And I'm like, "Ben, Sophia's only 4 months old." Oh, well, let's just go. Let's make it a boys' day. I'm like, Ben, we got to get in an airplane. Mama's going to be sad. So, and then Mom and Sophia will be by themselves. He's like, "That's okay, Daddy. Let's do it. Let's have a good time, just us boys." I'm like, because, you know, you get a new arrival to the family. He's 4. She's 4 months old. Kids get jealous. Like, all of a sudden he was the center of attention. Now he's not. Right? So now he's like, hey, am I unimportant? So I've made it a point, when we go to the grocery store, different things, I've made it a point to, oh, guys, you know what's happening right now? We're cutting this trend in half, 50% retracement. Remember I talk about the 50 rule all the time? Look at this. Bing, bing, 50. Oh, sorry. That was terrible. Sorry. Here, let's just put the retracement tool. I literally can't do this fast enough. Okay. Bing, bing. Look. 50% bounce. Right? Isn't that cool? It's not even the 50% the fib thing. It's that markets that are balancing typically move in waves of cutting things in half. Look what's happening right now in the market. Right now. Can you scalp this? Yes, you can. All right, 50. Now cut this one in half. 50. Look, 50. Oh, I realize I have yellow now today. Boom, 50. Now this one's going to come in. This is stops under this candle. Stops here. Watch. Right now, this candle has formed without a wick. So no retracement. And this is now a hammer candle, so all the price action guys want to get long. But again, we just cut it. We're cutting the 50s in half here, right? There's the 50. Oh, boom, 50. You're like, Mike, this is such random. No, it's not. The markets are fractal, guys. When they start moving like this is the question you have to ask. When the markets start moving like this and you can identify it in real time, you play it until the markets stop losing their, I'm going to make up a word, fractility. their fractalness. How about that? GP, thank you so much. Hey, James Ferreira, what's going on? Andre Dennis, you guys are just too kind. Man, I'm going to help all kinds of people this weekend. That's all right. I'll be on YouTube. Someone, one of my buddies, Timmy, asked, when are you going to do the Sunday charting? Because I'd like to hop in with you. I'll be doing it, Timmy. I just got to figure it out. I have a wedding to go to on the coast next week. And I haven't bought, I'm going to buy a nice outfit. It's going to match my kids. I haven't got it yet, so I'm going to do some shopping this weekend. So I just have to figure it out. But I flushed out the small pocket of positive gamma right at the gate. So hands off for me today. Yeah, James, I hear you, brother. So anyway, the market will start moving in a fractally nature. And what that suggests, this is what I was getting to before, is that the market is starting to balance. Now, let's get rid of all these lines. Because, I started talking about these channels here. But these channels right here, there's more to it. Which is, okay, when you start to break it, and at the breakout level, which is here, you start to hold it. And that level happens to be 50% retracement, which correlates to the breakout, and we're starting to hold this. And then the market gets fractal, and it bounces 50%, and it retraces. Then it bounces back down 50%, and it holds. It's a short-term market that is balancing. Now, let's consider one more thing. Let's consider this low. Bink, bink. And this low. Bink, bink. This is higher than this one. Is it not? Yes, it is. Okay. Now let's consider this one. Bink, bink, right? What is that? What's the name for this? Anybody know? Inverted head and shoulders, right? So if this is an inverted head and shoulders, what is an inverted head and shoulders? It is, here's trend, bing, 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 bing. So an inverted head and shoulders, which would be here, all right, this is left shoulder, head, RS is right shoulder, right? This is only telling you short term to be aware of a potential trend reversal. So clue 1, break. That's clue 1. Clue 2, you get a upward sloping neckline. Clue 2. Clue 3. Left shoulder and right shoulder. Right shoulder, clue 3. Right shoulder starts to hold and market moves back to neckline. Clue confirmation 4. Break of neckline. Defended on the pullback with volume. And now you go into BBWC where there's resistance. So measured move. Here, here, double it into BBWC. Now, does the market have to do this, guys? No, it doesn't have to do this. But you should be planning for scenarios constantly that this is possible, that the market does this. If you lose this area, oops, sorry, F9. Get rid of that. Get rid of this. Put this on. If you lose this area, it's usually trend down. Right? So if you're now, let's go back. If you're a scalper, where are you looking to take out high probability trades? You're looking at BBWC, breakdown zone. You're looking to get short. Bink. Value area low, right? VAL here. Right? You're seeing big absorption here, right? In our itty bitty little zone here, right? So you're looking to take off, maybe if this was resistance, maybe it becomes support. If you get in here, you're what? 40 to 36, 37. Now, you can say, I want to try and take off here in case this is an inverted head and shoulders. So you can say, I'm taking off 50% of my position here with the stop up here. And then I'm going to take off half of the remaining position. So now you got 25% left into the bottom wicks down here. Or maybe even 50% of this whole move here to here. Okay? And if you're still bearish on the day, now you have a great entry position based on BBWC. And if you want to let it run for the potential new lows, well, now you're in position. But where do I play most of the time? I play most of the time in these areas. I play in this area. First tap of zones. Now, again, I was busy getting distracted. But I play in first tap of zones for pullbacks. And you're like, but Mike, that's such a tiny movement. Look, that's 24 to go halfway is 24 to 32. That's plus 8. If most of my stops in liquidity are -5, and that's plus 8, that's better than 1R. That's like 1.3 or something R's. Somebody better at math. That's good. If I can take out 75% win rate, and I do more every single day on these kind of moves, guess what? Put it into Monte Carlo. See how that comes up. Anyway, so can you guys see, just based on candles, you have a lot of information here, right? And just based on classical charting patterns, trend lines, value area lows, now you see why I have a 5-minute candlestick up, right? I'm paying attention to volume, right? See this? It's a volume spike, but look how far it went. You think that this is going to be, if it held the breakout, do you think that this is not going to potentially go higher and find liquidity that we were looking at here, above here? Yeah, I mean, it's why I took the breakout. And yeah, I locked in profit. I locked in whatever it was. 7, 8 points, 9 points, 10 points, something like that, times 2 micros. But that's $100. That's $100 in what, 2 minutes? Now, we're not going to be doing that. We're not going to turn that over all day. But if you multiply, hey, if you can find 4 or 5 of these a day and win at 75%, number one, you're not going to be having 4 or 5, 6 losers in a day like all these other people, and you're not going to have your psychology ripped apart by over trading, right? And you guys saw me do it, what, 3-4 days ago? Over traded the close, pissed back a bunch of money. It sucked. It felt bad. I said, I hate losing at the end of that. I was like, I hate losing. It did piss me off, even though it was, for me, an insignificant amount of money. Based on the rest of my... I hated looking like an undisciplined noob in front of 30 or 40 people. And maybe a few hundred that watch later. I hated it. That is part of trading live in front of others who can see your entries and exits. Is you now have to rationalize why you did what you did. You don't have to, but you should. And you can look like an idiot. So that's beneficial. Play under pressure, right? There are some people, I'm a big fan of basketball, who are the best shooters in the world in their driveway, in the gym when nobody's around. The bright lights get turned on, and they can't hit a free throw. Nobody guarding them. You have all the time in the world. Well, maybe not. Maybe you got 10 seconds. I don't know what it is. And they can't make a shot. So it is useful to come on YouTube, trade, and show people, number one, here's a successful way to do it. But for me, it's also helpful for me to go, I'm kind of bored after a 2.5 hour stint of trading this morning. And I really know my own proclivity towards overtrading because I love to trade. I love to click the buttons. Maybe I have an ego, right? So I'm going to go on YouTube and I'm going to have to know that I need to either talk some sense about the market or I need to slow down my trading and demonstrate disciplined trading. Otherwise, number one, I hurt other new traders. I hurt people by my conduct in the market. 1. 2, not only do I hurt them, but I might have a good day over trading, and now they all think that this is how you should trade. And then what? A lot of these people start doing it without the experience, and they get blown up. So, coming on YouTube, trading a little bit, it helps me with my discipline, right? So, what's the takeaway from all this? Find some accountability people in your life, especially with trading. I know I constantly say I've never paid for any chat rooms or any training or anything like that. And I'm not suggesting that I'm going to do that. I'm not. I am not going to do that. I don't have the time for it. I love my family too much. But I do suggest if there are some groups out there, maybe it is the pit, right? Maybe it is Adwas Bakari, I think his name is, or something. E-mini trader, whatever his name is. I've heard good things about him, right? Maybe it is TikTok. I don't know. Maybe it is the E-mini trading group with VWAP trader. I don't know. Or maybe it's, what's that guy's name? The cowboy from Texas. Market profile guy. Anyway, he has a chat group. Maybe it is Adam Mancini, right? Do they have discords? Maybe it's Trades by Matt. He's got maybe a really amazing discord. And you guys all connect with each other and help each other out and keep each other accountable. Start an accountability room. Or I noticed he had in that room, he had a great thing, which is, I had it's like a voice channel where, or maybe it's not a voice channel. It's like something having to do with like I tilted today. On tilt, discuss it here. You know how amazing that is as a trader to go and have accountability with people, right? And again, I watched a little bit of Trades by Matt this morning. I saw he had a losing day, but he posted it. Great. You have my respect, my dude, because you're not like some of these other people that only trade their after the fact crap. I was part of a Discord, and believe me, I got close with a lot of people who still, after a year of knowing me and knowing that I was an honest guy, right? That I shared my losses, I shared my wins, I shared stuff in advance. Even after a whole year, they wouldn't share their trades in advance with me. They wouldn't put themselves out there. And you know what? Some of those people never grew. I mean, I hate to say it. I'm not trying to crap on anybody. But if you're listening and you never did that, and you're wondering, man, I still can't find success trading futures, it's because you need to admit when you're wrong. If you have a failure, just admit it so that you can learn. So you can fully embrace what I'm doing isn't working. I've done it in front of other people, so I'm not going to continue to lie about what I'm doing or what I'm not doing. So I'm going to embrace fully that my process doesn't work, and now you can move forward. But if you don't do that, it's going to be a long, painful journey, right? And this goes with anything in life, right? If you're an addict or whatever, these principles ring true in everything, right? Your faith, your addictions, your relationships, right? The best relationships are the ones that you say, I'm sorry, I was wrong, I admit it. And the other person goes, oh, wow, I can trust their intentions. They're a good person, right? They have enough cojones or enough lady power to admit they're wrong, right? I'm not just taking the male side here. Appreciating that we live in a world of powerful males and females. So anyway, not trying to get all chauvinist by saying cojones only, but so anyway, the best relationships are the ones where you apologize to each other and admit honestly, hey, I sucked today, or I don't know everything, or hey, this guy pointed out something to me that I never have used and always thought it was stupid in trading because maybe I don't understand it. But after today, yesterday, the day before, him demonstrating, or her demonstrating that it works, I can now admit I'm wrong. That's powerful, because now you can move forward. But if you constantly lie to yourself about your prowess as a trader, then you're not going to be able to make progress. So there is a lot of power in joining a group of people where you can trustingly share your failings and have a group of people around you that are willing and honest about helping you in your trading with goodwill. That's what I tried to do with the old Discord. It just took too much of my time. I was so honest about helping other people and trying to get back. But go find a group that espouses that philosophy. I'm sure they're out there, because I'm not the only person in the world, the only trader in the world that has this hope or desire, right? I mean, if you don't know of one that's out there, I'm pretty sure Trades by Matt, if you just watch him, listen to him, seems like a good guy. I would suggest you go check out his Discord. Again, I have no financial interest whatsoever. I'm not linked to Trades by Matt at all. But I perused and I was like, I'm impressed. Go find a community. Help each other out. And if you're the kind of trader that's like, I'm looking for a community, Also, go be the community. Be the person that actually does something about this. Sorry, I'm going to take a trade right now. Might break down, but I'm willing. We're going to get in. Come on. Bah! Terrible. Really? Oh, you guys can't see it. Oh, man. Look, I got this big old screen open. That's an ES screen, not an MES. See that? Oh, this is actually useful to look at these zero prints. I thought we were going to pop. I was going to take this scalp. A market that is at rest, that has held the right shoulder like this and gone a little lower and refuses to sell down, is usually a market that will go test the upside again. What I don't like is when the market moves to the upside without any trap traders. In other words, no volume. So you're like, well, why didn't you buy, Mike? Well, I'll tell you why. I didn't buy because you would get the... Oh, here. Okay, I don't know if you guys can hear that. My 4-year-old. So, me and my wife, we do... And I won't forget why I didn't... To explain why I didn't buy, guys. But my 4-year-old, we teach him to do cute things, right? One of the cute things we teach him to do is, like, if an Amazon delivery driver comes and we're home or whatever, we teach him, when you go pick up the package, when the Amazon driver has his window down, yell as loud as you can, "Thank you so much, thank you." So he was out there, I'm looking, I'm like, what the heck, who's yelling at my front door? My kid is yelling, "Thank you, thank you." And he's so earnest. He's 4. It is the cutest thing in the world. Anyway, the reason I didn't buy this is when oh, kids are great. I mean, they're challenging, but they're great, especially at this age, especially if they're earnest and they're not brats. And, well, we're teaching him not to be a materialist little kid. He has enough toys because of family and stuff, but we rotate him into the garage, and then he has this very special cardboard square that I have put that's has 1 on it, big letter 1, and we spent a bunch of time with the Sharpie writing 1, like it's so important. And it's his exchange card, and he gets to exchange a toy from the garage every day. And usually he forgets, so it's like once every few days, or 3 or 4 days. So we do things like that, but we don't just give him all his toys, because man, kids turn into materialists, man. If you stress toys are important, they'll be like, toys mean the world, and they'll still think toys mean the world. But you just, dude, learn to talk to other kids and play outside. And during COVID, that was tough because everybody was, he's 2 years old, 2.5 years old, and everybody's like not going to the parks, and the parks are shut down. So he did have a weird time through his social formative years. But anyway, I say go hang out with kids, and there's no kids to hang out with. So anyway, the reason I didn't want to buy is when we opened this candle, we went straight up, and it was a bunch of zero prints with no volume, which means that as they buy up here, if the volume's occurring all up here and there's a bunch of zero prints here, it means there's no trap traders that they're buying against. So I'm interested to buy to see if the market pushes up, but if it leaves all the zero prints behind like it did, then I likely, if I was trying to get long here, now it's looking better for a long, but it's coming up against all the resistance here, but it is looking better. The volume here is starting to outpace all the volume in through these areas. So it is interesting. They may just be absorbing for a push down, so who knows. But anyway, the reason I didn't buy is because of the zero prints. No trap traders to cover out as it goes higher. So price would likely not propel up, which is why I removed my buy orders in this zone, because it's most likely going to collapse against a lack of trap traders. You want volume. You want traders committing to the wrong direction so that when we break that zone, they all have to cover higher on what? Volume. And that covering higher on volume then causes the market to move and rip much higher. And then the players who are trying to push it there in the first place can get compensation as the market races away from a zone. You see how that works? Yeah, Raymond, totally. Rotating is important. It's also important in the markets, man, getting these sweet rotations. So anyway, that's why I didn't buy. That's why as it moved up. So what I would have done, so here's how I would have managed the trade, is if I had gotten the fill, wherever it was, here on this candle, down here, which is, where was it? It was about here, so 24.50. So right here is where I was trying to get my fill. And it came up and I saw these zero prints. I either would have tried to get out into the highs here, and I would have gone to my DOM, gone to my Stream Deck, hit that button that moves all your stops to wherever your pointer is hovering over on your DOM, and the two stops would have moved into profit by 2 points. And I would have said, doesn't hold this high, I'm out. So I would have locked in maybe 1.5 points times 2. 3 points, $15 on the micros. And that's what I would have done. Absolutely 100% how I would have played it. Look at the ice here form right there. See it? At 25. Now someone's making a stand. So guess what? The other side gets to screw them. Now, think about it from this perspective. This volume node here, so everyone's so concerned about the iceberg, right? Oh, slowing the market down. No. This volume here was someone buying. Now we go back, what? Into the meat of this consolidation, where are shorts really uncomfortable? Right in the middle, because of what? Like, this market didn't hold this area, or if you put a trend line like this, the market didn't hold it. It came back in, so everybody's like, well, anti, right? Adam Grimes's reversal setup. It's the anti. It's the reversal. So let's go long. So they decide in about here to go long. So what does the player that maybe bought this whole area do? They go out, they get out right into where traders really want to move it in one direction. Now, slightly bigger picture. If you're now all shorting here and volume is filling in and they've taken a lot of profit and they want to be long, what are they going to do? They're going to turn off their iceberg and they're going to continue buying because now they've got profit, right? They've opened up their margin from here to here. Now they got contracts to push it up with. So if you start coming in on the MBO, liquidity starts moving down. You start to see 10, 20, 30, 40. You're all lining up right here, right? So you're a large percentage of the book. You're all lining up. What are they going to do? They're going to go hit that liquidity. But right now, is there any liquidity on the MBO from here to here? No. Are they hitting it? No. Might they hit it because of this? Maybe. But I'm sharing my thoughts and I'm attempting to share my thoughts about this market and how liquidity moves in real time. It doesn't mean that I am gonna be right about it moving higher, but I am processing a bunch of information as I'm looking at this footprint, and my methodology of processing the information is something that you can use and then spin it in a way that works for you. So you see all the liquidity coming in a little bit? See the market short term just started to tick up to it? The liquidity came in, ding, 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 ding. What did the market start to do? Take it. See that? Why? They're seeing a volume node develop here, and they're like, all these traders are trapped in this volume node. If I get filled here, there's probably an opportunity for a retracement here. But again, market loves to go against people who show their hand. Here we go. Let's see. So this would be the level that they cover out in. So they got maybe filled in here. See how it went higher? Maybe it got their stops. I don't know. But they're going to try and get out in here. Let's see. Let's see. You see the 20 lots there? Anyway, can you follow the story? There's 10 lots there. 16. They're playing now. People are nervous. They've got them. What time is it? 11:41. They've got them. This is what I think. They have got them where they want them. They started putting liquidity here. I think they've got them. And I think they've got them exactly where they want them here. If they passively absorb this, these guys are going to essentially shit the bed, or ish the bed. Sorry, YouTube. You know, I can curse once in a great while on YouTube, but I can't do it constantly. Or else YouTube goes, oh, you want to monetize your channel? We don't trust you. Because you say you don't do these things. So then I got to get approval for everything. But right now I'm self-approved because I do a good job following the rules. I think they got them. It's time to rip it. Now, can I put my money where my mouth is? Yeah, sure, why not? Let's go. Buy highs. Oh. It's fine. Come fill me. Ay, ay, ay. Come on. Really? No feels for you. Really? Just like that? No feels for me? That's jacked up. That is jacked up. Well, guess what? I'll just watch. Oh, 100 lots right there. See that? Bing! See how it came in? Boom. They got them. They're going to roast them. Now, how do I determine that, right? I tried to talk it out for you guys. I try to talk it out, but I don't know that it makes a whole lot of sense. I don't know, because I'm honestly, this is where Feynman method comes in for myself, like where I may have to listen back to this part of the video, and I won't listen back, but I am just not sure I'm super clear about it. All right, good. I'm glad it does, because ice up there again. See? Ice up there. This is now this getting out. Where are they getting out? They bought against here. They're getting out. Now, if it's ice again, right? Now it's pushing down. If it's ice again and they were able to get out a bunch of contracts, can they push it up again? That's the question. So if we're right about our long thesis here, and they're de-risking taking profit, are they going to bend you over again? This is what people don't understand. They blindly say, iceberg? I'm going to sell with them. How do you know? Again, you got to track the story of who's in pain based on price action on the footprint, your time in sales, who's taking initiative, how price is holding. They're going to pop it. Because these guys are just taking profit. That's what they're doing. How do I know? I don't. I think. They're going to pop it like it's hot. They're going to try again. Where's stops? Right now, where's the place to short? Right here. See it? Right up here. 37.50 down to 34.50. That's your short. All right, so if you got filled 34.50, let's see, what time is it? All right, now look up your heads up display. It is plus 2,000 ticks. All right, if you're short 34.50, you got some. Now what? Came down to 31.75. Nah, you're not happy. You want more. Retest of 30.50. Then you see. Now take it off. Boom, you're out. You don't know what's going to happen. This is maybe trap trader short term. You do not know, but you got that scalp. You scaled in. You got a few contracts. You're out at 31. 3 points. Boom. Can you process that fast? Good scalping takes. You need to be able to process this fast. I have no idea what's going to happen right now, but I took the high probability into volume node, right? And did I call it in real time? Yes, I did. So there's predictive power in using these footprint nodes. Anyway, if you like it, just like the channel, please. I'll share more of this stuff. If you like what you're hearing, please just hit like on the channel, and then I'm a happy boy or a happy man. Oh. Hurry up, Ticino. It's all good. He's a busy dude, so it'll come. Hey, the lodge where the wedding is going to be happening on the coast is welcoming me already. We can't wait for you to come and bring your 4-year-old, who can then cry some of the night and annoy the neighbors in the room next to you. Nah, she's a good girl. She hardly cries. It's going to be fun. First time traveling with the little one. Exciting. Ed Venus, I appreciate that. Gabby Zohar just tweeted iceberg seller NESF. Gabriel, you're the man. Come on into the stream, Gabriel. Come on, dude. Oh, boy. Hey, Alvaro, I do appreciate that. I appreciate that comment. I wouldn't say I'm a master. I would say I know I win at a high clip because I process a lot of information. And so here's the key, right? You're like, man, maybe if we listen to Mike a little bit, we can learn to think this way. So here's the key, guys. I'm going to do another, we're going to talk more analogies. If you're a basketball player, are you going to play just like your hero? I'm not saying I'm your hero. I'm saying there's somebody that you admire and you want to trade like them. Are you going to try and emulate everything they do? No, because everything they do is a result of the way that they use their own brain. So my suggestion is learn to use the tools that you have in a way that works specifically for you. But learn to use those tools very, very well. You're like, but I don't even know what tools to use. Okay, well, I'm sharing a bunch of different tools. Am I not? I'm sharing MBO liquidity. I'm sharing footprint liquidity. I'm sharing DOM activity. I'm sharing classical charting patterns. I'm sharing 50 rule. I'm sharing a little Fibonacci, right? Volume profile. All of it works. I'm sharing BBWC, support and resistance trading, right? With maybe a little bit more detail about that, okay? You could use Bollinger Bands too. You could use moving average. You could use modified MACD. Thank you very much, Gabriel, for your modified MACD that you shared with me. years ago. That's awesome. I don't use it anymore, but you could use it and use it well. All right. So, you know, you want to do what's the latest and greatest thing out there? You want to use price action, Pats trading? Go for it. Use Pats, right? Al Brooks, go for it. But then now start to incorporate not just the rules that they teach, but how, if the majority understands the rules one way, how are they moving price? That's what you want to use. I happen to think the way I do it is the best. Why? Because it's the best for me. It's not the best for everybody. So anyway, what is going to happen here when we break these highs? We're going to go into BBWC. And here's one potential right now in this area. See that channel? What does it become? Bear flag. What time is it? 11:50. Hour and 10 minutes left. Like, but all I care about is the movement from here to here. Great. That's all you care. Oops. If that's all you care about, that's bloody fantastic. Fine. Bigger picture is this. Oops. Is now a channel. We're probably moving up. There's probably stop liquidity now above this zone. People get triggered out. And then everyone will notice after the fact that this turns into potentially some sort of channel trade. And then as we get closer to the close, because it's a bearish day, maybe we sell off into the close and they accumulate contracts on lows, on volume, and have a mighty settlement at lows, and then they push it up overnight. Sunday night, right? There's the news cycle for this weekend. I don't know, but this would not surprise me. And then everyone after the fact will look at this. So what do we do as traders who are trying to predict the future? We come up with scenarios where we want to sell. Is this BWC? Yes, it is. Is it power hour? Are they about to break stops right here? Yes, they are. Straight up. Is there a little volume node here in the RTH? Yes, there is. Is that corresponding to BBWC? Yes. Are breakout traders now going long? Yes. Are they absorbing short term? Is the volume node building? Yes. See? Can you process? Can you process in real time? They're absorbing. They're getting out into the FOMO. This is all thinly traded. They bought it up to here so that they can distribute higher. They will keep buying until they think there's no resistance or there's too much resistance. Then they're going to attempt to get out on your heads. That's what they do. They got to do it into new highs. You get out into the FOMO and you get into position on loss of momentum and volume and where everybody else wants to get long. So, oh, more icebergs. More icebergs. Look, 1,100 contracts, 1,200 contracts, 1,300 contracts, 14, 15, 1,700 contracts, 1,900 contracts, 2,000 contracts. It's now a bright blue delta iceberg now. So what? Everyone wants to short? Still not at the trend line. It's the channel line. There it goes. We put lines on our chart, and the lines determine the market direction. No, I'm just kidding. But it feels like that if you have a predictive kind of, I don't know, predictive mentality. Hey, I'm short. Guess what? So what? Here. Click on here. Look, I can lock it in. Bing. Bing, bing, I'm out. Right? 5 more points. Now imagine if that's an E-mini contract. 250 bucks. In what? Seconds. Seconds. Look. You know how many people are going to be now saying, oh, there's a perfect trend line here. Look, it's a channel. What did we do ahead of time? We figured out the channel before it happened. This is the kind of ish that you won't get taught by people who can't trade well and predict the markets. They're always after the fact. Oh yeah, look, hey, we have this this channel, and look, we rejected at the channel. That's all hindsight trading, guys. I'm getting you in to position before the channel's there. Used to do this ish every day in Discord. I don't have Discord anymore, but I used to do it every freaking day. And traders are like, how do we do that? How do we do this? Right? And I'm like, look, just learn my process and how I think about the markets and then apply it in your own way. But ask the right questions. That's it. Anyway, this channel can help a lot of you guys if you're willing to learn how to think about markets, not what to think about markets after the fact. You're like, how do you know this stuff? Well, I used to be a big trader in crypto, and I used to bully the markets in crypto. So I know what it's like to be the hunter, and that's why I talk about it. You guys, most of you guys know, are the hunted. Okay? So I'm trying to explain the hunter perspective by talking about what it feels like to be hunted all the time. But I'm actually trying to apply what I know about the markets from the hunter perspective, trading it's not anymore, what was one of the easiest markets in the world to trade. Why? Because it was full of a bunch of get rich quick idiots. That's it. Just get rich quick fools. And those are the easiest people to trade against. Why? Because they go with FOMO and they never take profit. And they only take profit once it's fallen 50%. And so that behavior, the behavior of the parabolic chaser, is the most predictable behavior in the human animal world. So when you understand how to game the weakness of greed and fear, your trading will take off. You will become light years ahead of all of the other pleblitos. So, anyway, I do appreciate you guys being here today, listening to my rants. My rants, Dennis. I'm a ranter. I am a ranter. You could ask anybody from the old Discord, did Mike used to rant at times? They'll all say, yeah, he can rant with the best of them. He's a ranter. Here, let's take all our predictive crap off so we don't look like furus after. Like, someone's just entering the stream, they're like, what an idiot. He added that channel after the fact, dummy. Right? Wait, am I trying to take off the value area low that's developed down here? I am. I'm trying to click it. I'm like, that's a line of mine. Nope, that's value area low now. See how it migrated way down? Value area high migrated to here now. So oh hey, let's use statistics theory to understand what's happening. Do we have a ledge here now on the volume profile? Let's take a look. Let's take a gander and figure out what is migrating in real time on the day. Alright, let's go to about here and let's add it. Hey, remember Trader Dale has the sliding thing for he has a sliding thing for NinjaTrader? and he sells it, and he's like, oh, this sliding volume profile thing is so amazing because you can just slide it around and see how volume develops. You know, Sierra Chart has this built in. You know, I've done a YouTube video on how you can make this. Watch. Look. Look. You want to see the way that the current candles stack up? Look. Whoa, check that out, huh? Look. Bing, bing, bing. Oh, that's how volume developed today. Oh, you're like, no, you're going backwards. Okay, let's start from this side. Boom. Big volume ledge. Hey, what? You mean at this point there was a big volume ledge right here? Oh, cool. Okay, let's see. Big volume ledge, right? Maybe this volume was indicative of this ledge breaks. We can do balance rules. Oh, look. Hey. I'm not getting overconfident, guys, just because I made a few decent market calls. I'm not. I swear to you I'm not. Because this is part of my daily repertoire of understanding the market. So this is not a big deal to me, okay? All right, balance rules. Look, where did the bounce occur? Oh, did I go too high? Yes, I did. All right, let's put it on here so we don't look like we're hindsight trading, okay? Now let's move the balance rules down. What? Balance rules. Bing. Could you take the breakout and go for balance rules? Now, my rules are, if you have balance rules, you take off into 80% of projection from balance. Why? Off into the FOMO. Take the reversal on momentum loss and weakness. You see how I roll? This is how I roll. I'm not trying to get the bottom tick. I'm just trying to get a decent amount of movement. That's it. So I had a good morning. Because I'm doing stuff like this. Anyway, that's why I'm trading with you guys right now. Because I already made money. And I don't want to overtrade E-minis on size. And essentially piss out the window and have it splash back in my face. So I'm willing to go trade micros and, I don't know, make $800 or $900, whatever it is. But anyway, that volume profile thing, let's go see. Let's go look at how volume progressed during the session today. How about that? All right, where's the session start? Blue line. USA. All right, let's go see. You guys are like, why would you do all this stupid analysis when the market's moving so much, Mike? Because I don't want to overtrade right now. Let me just explain it so I don't overtrade. Double volume distribution. All right, balance rules apply. Double volume. Initial balance. All right. 1 hour into the open. What happens? 7:30. Boom. IB now forms. Initial balance. Bing, bing. What happens? All right. 50% of initial balance is where? Boom. Right here. Does the market slow down right after 50%? Yes, it does. Does it hold? Does it do 100% balance? Yes, it does. 100% of initial balance. Does it hold 50%? Yes, it does. Whoosh, trend day. You already had the clue. It's already a trend day. You had the clue. You hit 100% IB, retrace 50%, and now we're trend day. Now, is this in a Dalton book? Maybe, maybe not. It's what I do because I know it works, right? So you see how if you're asking questions about how the market typically moves against volume distributions and initial balance, you may have an idea about the way the market may move the rest of the day. Okay. I also, oh God, I have more charts up. And these other charts help. I have a 30-minute chart up. You guys can't see it. But the 30-minute chart is clear as day about how this market's moving. And I actually put the lines in on one of the old live stream in front of you guys. It's not like these lines just started existing. So, but anyway, Let's go back to this volume profile tool. Click it. Let's see how the market developed. All right. So you see these outlines here are what's included in the volume profile. Okay, we go right. And now this is what the market looks like. The bright white. See how I make it bright white? And so it doesn't get confused with this background. There's a reason. There's a method to this madness of coloration. Okay. Volume around where? 100% of initial balance. You see how smart traders always cover out at volume areas? You see how smart traders are de-risking and taking profits at 100% IB? Now, if you want to pick up the breadcrumbs, you can scalp that with defined risk. Right? Pick up the breadcrumbs of the institutions, of the big boy and big girl traders, right? People that know how to not go to the poorhouse by never taking profits. They're always taking profits. All right? Come down. Oh, hey, look at that. See? Above 100%, rally. Where do we reject at? Where? When I was telling you about trends, 10 SMA. Here, see the 10 SMA kind of reject here? That starts giving you a clue that the 10 SMA is trying to always hold on downtrends. Does it go sideways, go into value area low, and then boom, get smacked down? Sure. Does it go into value area low here and get smacked down? Yes. Notice, look, notice that the line right here that says value area low is following these dashed lines because it's developing value area. It's dev value area low, developing value area low. It's dev POC. I always keep that on the chart. It's important, guys. It's important. See how the red line follows down what the market already did? It's important. I'm telling you, it's important. That's why it's up there on the chart. All right. So big, another distribution area. Balance rules apply always. Go to the end here. Boom! Distribution from what? IB high, IB low. We already talked about that. So remember the brighter here, right here, not this background, but the brighter. You can also go change this background to something like, and I probably will. Now that I'm looking at it, trying to explain it to you guys, I should change the drawing tool that uses this volume profile. I should change it to like bright blue so that it could never be confused with the other color. Right? But I know what it is. It's this larger one. This one makes it look brighter in some areas, but anyway, I know it's the lighter white. So the lighter white looks different than this dark, but anyway, trying to help you guys learn to use your tools, right? Anyway, volume, building. So we get distributions, right? Now the big distribution down here. So, okay, remember what we said about how it may move into the close? All right, let me delete this because I just want to point something else out. But here I am talking about the future, right? About this channel. If you guys have just started watching, rewind it. Here I am talking about this channel. Guess I'm doing this in real time. They won't believe that this video is real time after the fact. They're going to be too lazy to go back and look at the upload time and actually investigate if this video is dead. They're going to think I'm doing this video after the fact. It's just how it is. I already know. No one is actually going to think like, TYP actually called this move ahead of time. Nope, they're not going to think that way. What did I say about what is a likely scenario based on my podunk experience as a futures trader? New lows into the close because it's what all the FOMOers, new highs. What is it going to look like? It's going to look like a bull flag or a bear flag on the daily, intraday. And then everyone's going to say like, I knew I should have shorted this. Should have shorted it here. And man, it went all the way to here. Like, that's 20 points lower. But the problem is, you're over here at the hard right edge of the chart, right? At the hard right edge. It's hard because it cuts ya. It's hard because it's real time. The hard right edge. At the hard right edge, you're looking at, hey, this is support. Look at all these wicks. And guess what? It goes bing, and it bounces. Watch it bounce. Because it's support. People were wrong with shorts here. Trend line here, support is here. Bing! At some point it's going to bounce. Like, BS. Nope. This is how markets behave. You'll see. If it goes a little lower, it'll bounce. And if it doesn't, I'm wrong. That's fine. But most of the time, it does this. Bing! Once it breaks some sort of little trend line. Okay? And then all you guys that are shorting right here at 27, you have profit into 25. And you're sweating it because you shouldn't be trading an E-mini contract. You should be trading a micro contract. Okay? And so when it bounces, because you were in profit for a little bit to here, when it bounces, you're like, get me out. And then it goes what? It does a little 50 rule thing. Bing, bing, bing. And everyone gets bullish here. And then they absorb it potentially. And then they break the what? 1, 2, 3. Trend line. Rule of 3. 1, 2, 3. And then you cry, I was right on the trade, but wrong in the execution. Now, why is that? Oh, poor trader. It's because you can't think ahead. It's because you get out where the wolf gets in. Where the higher low or lower high is made, you get out and the wolf gets in. Why? Because we know psychology. That's the truth. We know the psychology of traders and we know how to use it against them. And so do the institutions. So you should be attempting to follow that. And you know what? From here to here, I might be wrong. This might be rule of 3 and but more than likely, in here, I'm right. Now, do you see me taking positions? No, I'm not taking positions. Because even though I might be able to predict this move and predict that move, maybe, this is the lowest probability for me of the whole day. So do you believe me now that I say I win a lot? You should, because if I can kind of predict this from when the price was way down here somewhere, right? Maybe in here, and predict this, and I still don't take the trades, and I'm telling you I took trades early in the day, the early in the day moves are much more predictable for me. This is crap time. This is hardly any momentum in the market, and the probabilities of success are diminishing for me. The closer we get to the close, into power hour, on a Friday afternoon, with the weekend looming, I don't want to risk my hard-earned money anymore. Why? Because I value high probability trading. Anyway, let me get off my pulpit. I sound a little too cultic here, and it's ridiculous. Making myself throw up a little bit. I apologize for that. Back to, I don't know, let's talk markets. What do we got here? Jeez. Get myself out of this cultic trance that I was in. Jeez, man. That was terrible. Anyway, hope you guys really understand and really appreciate that I'm teaching you something that is true. I'm not misleading you guys on purpose for the sake of having more ish traders in the world. I'm not. You stumbled onto a feed with the trader that can predict some market movement, and I've been doing it for a long time in front of other people on Discord. You know, I wish I could take all the inside folks on Discord, have them all show up here in the chat, and they could all just say, yeah, we're honest people, and we wouldn't lie about it, and he really does do this. So that you guys can go, okay, I really can trust what he's saying actually makes sense. But a lot of them won't do that, or they're not even listening to the stream, or I don't know, maybe I've pissed some people off by shutting down the Discord. There were some people that were pissed about the Discord being shut down. They were pissed. Look at how they're buying it here, right? No volume. They just bought it. They found the stops. Why? They're going to sell into your bids. They want to sell lower. They need you all to bid. They need you all to bid is what they need. See how they just went and got the 50 line? Like, what? What are you... How can this be? Yes, some of us watch the market and we're this detail oriented with the market, and we actually have experience knowing the way the market moves on certain days. Mike, you should be making way more money than you're making. Yeah, okay. Yeah, I shouldn't answer that one. Ed Venus says, you should open a hedge fund. Maybe I already have a hedge fund. Maybe I'm already connected. I'm not suggesting that. But your assumptions aren't too far off. Maybe I am the hedge fund. Maybe I'm the maybe I have a seat on the CME and I'm on a separate screen doing all of this in real time. You know, there's a lot of really devious people in the trading world, guys. You know that? There are a lot of... I've seen some craziness. Because, you know, when you get exposed to someone like me, there are people who want to take advantage. They're like, you know what? He's the gravy train. Let's just get him talking about all of this stuff in real time. Hey, Dirk, you remember when I used to spit all my trades in real time on Discord? Are you still there, Dirk? How much did people love that? Do you remember that? My Jay Powell's kid. Do you remember that, Dirk? Are you still there? I don't know. Dirk's probably sleeping. Dirk lives in Switzerland. Dirk's a good dude. He was part of the inner group in the Discord that no longer exists. But he remembers. People are scandalous. They take the whole Discord that I had and screenshot everything and then make their own Discord and then don't give me access to it and say, hey, welcome, Mike. We know you're not doing Discord anymore, but here's access to the Discord. But you don't get access to your own stuff on a private channel. The teachings of TYP. Why? Because you're all data hogs. That's what people do, guys. That's what people do. It's pretty funny. But, you know, I knew that people were like this already ahead of time, so hence why I'll never put something into a format that people can actually make sense of in a written form unless I charge you $500,000 for it. And it's a one-time with an NDA. Anyway. The guys on the... yeah, maybe. I don't know. Let's see. Lilu's promo today. This could be a good idea to connect to a fund on the second stream. You know, I self-fund, Mr. Bisek. I have my own multi-funds. Thank you very much. Anyway, enough. These are the rants that some people probably don't like, which is fine. But it is what it is. There's I realize it's like, you don't have to be negative on the people that you used to be close to. But, when they just act a certain way, instead of like, hey, thank you for all you did, some people were not that way. They were more like, oh, you're not going to be helping us out anymore. And then they start acting differently. It's so disappointing. And then you just realize some people are just greedy, and they're not there because they're kind human beings that will treat you the same no matter who or what you are. As long as you're kind to, they won't. Everything's just what can I get? What can I get from you, Mike? And I'll maintain that relationship as long as I'm getting something. And then when I don't have it, I don't have enough foresight to think you might be helpful in the future, not only as a human being, but as a trader. And so I find value in that. No, people are more about the monetary, short term, what can you do for me? So me as an intelligent human being, when I start to see people treat me differently like that, I go, you're done. I'm not even going to give you the benefit of an explanation, because it's so freaking clear to me the way you are that we're done. Anyway. No Lambo flashing? Darn it. There's got to be some kind of will you take an IOU? Yeah. Anyway, enough of the rants. Let's see what happens in this market today. So let's look short term. There's not a lot of volume up here on the downside here, right? There's a little volume node here, but there's not a lot to resist this market to the upside, right? So if you think about this market, right, let's just change our minds now. Think about this market, right? We had this trend line up here, and then we had all this resistance in this area, right? And then we had some aggressive selling. Now we have volume nodes here, and now we're above this volume node. But we already washed out short term the traders that were here. And now anything above here from any traders that averaged in, yeah, they're going to take profit in here, so it might get a little, it might slow down a bit through here. But short term, there's no volume in this immediate bar. We already hit this volume node here and then sold back a little bit. So right now we're just rotating up. So you have to know when to abandon your thesis about, okay, we think it's going to go halfway and then pull back. It still might happen, but if you guys have watched my rule of 3, right? Be like water, right? 1, 2, and then if you get a gap before the third trend line, the gap is bullish. So here we are into this area. You already had the idea that this was going to be a bounce area, and then it held the gap. So that's confluence. It's multiple ideas giving you confidence for a trade to the upside here, right? And this is what I was saying. I think I'm going to be right here about a bounce here because shorts are trapped. And so for all you folks that are, I don't know, thinking Mike might be right about this and started shorting here, I already told you this is bad location for a short back through this trend line. So the short term was you had this, probably get a 50 bounce. So you could have taken that trade for the 50. And then a little bit longer term, now we're rejecting up here, right? So if we take out on the footprint this area, we're probably going to go through here in the next few bars and take out this trend line. But you have to know that are these weak or strong hands? Was there enough rotation here to get them out? So what I would be thinking a little bit here in real time is node. All right, If you bought here and got out and somehow de-risked into here, node, no buying impetus. If you iceberg sold this area and you see this as value, as we break above and make new highs, retail traders stopped out. So I'm just thinking about the rotations. Yeah, if you break this zone here, what is it, 38.28, then we're probably going to destroy longs into the close. We'll see. That's one scenario. I don't know what's going to happen, but that's one scenario. Yeah, let's see. I think Dirk's in Switzerland. I don't know. Dirk's a shy guy. He's quiet. Daniil Yefremov. How many people were in your server? He asks. I don't know. I know it was above 1,000, maybe 1,500, maybe 2,000. I'm not sure. Daniil. Maybe 2,000. And then of those 2,000 people, there were maybe 12 to 13 or 14 people that met the requirement of give and take. In other words, they were willing to do enough to be selfless enough to be able to trade with me and have me at their to be able to have access to me anytime they wanted, basically. And there's no charge for anything. And then, of course, the appeal is you also have 12, 13 other people that are of like mind, and so you all have access to each other. But not everybody in there was a successful futures trader. I'd say the majority were not. Right? There were some very good traders in there, but not, maybe 30%. Were successful future traders. The other 25, 30% were maybe still trying to be funded traders. And then the others were like learning futures, but successful fund managers or long-time traders. So it was a mixed bag. Some massive experience in stocks and penny stocks. Some futures experience in there. Not everybody in there was an experienced futures trader. So, yeah, you had a few pretty good futures traders, but not, I'll be honest, nobody of my caliber was there in there trading futures. But maybe they were better at stocks than I was, better at penny stocks or better at other things. So that's what it was about. So out of, I don't know, a lot of people wanted to get in, but not very many people would really like journal publicly. They wouldn't post charts. They wouldn't demonstrate the desire to want to help other people. Because if you're going to allow people to have access to your bread and butter every day and discuss markets, you want people in there that really get the idea of like, yeah, you put out, but I put out. And you have something that I want, so I'm going to put out even more because you have the knowledge, right? You want people around you that create such an awesome environment that everybody is continually willing to share with each other without fear of doing more than everybody else. Okay? So that's what I tried to do. And it just got too time consuming. The fact of the matter is I loved everybody in there. They were great people. Some changed their tunes once I left the Discord. They started to act differently, which is totally fine. I get it. You only have so much so many resources in your life, and why would you dedicate resources to somebody that's not giving you benefit? And of course, I'm going to see that you're that kind of person, so why would I ever talk to you again if I deem you're that kind of person? So here I am, I can cry over it and say, oh, wasn't the kind of person I thought they were. That's fine too, right? At the end of the day, someone's going to appreciate this. I'm no snowflake either. So, it's just the people that I feel are very personable and very genuine and would like to connect with me, because I was with these people for a whole year, would like to connect with me on more personal level, right? Had maybe a little bit better interpersonal skills, blah, blah, blah. I'm still connected. I'm still talking with those people. But I'm not talking with everybody there. So, you get these things in trading, right? You spend all this time trying to build up community. And then at the end of it, sometimes people are like, F it. I don't want to be a part of this. Or, I don't know how to do it myself. Yeah, Daniel. I mean, it's cool. It's hard to, that's why there was somebody in here that was like complaining about getting banned from that Discord, and I was like, essentially, I get what he was saying, but at the same time, it's more complicated than I said one thing one time. Sometimes it's, are you toxic for a long period of time, or are you, doing other things, and that's just the last straw. I usually side with the admins of a place because they have a thankless job, and it's hard. It's hard trying to maintain order for something that people don't pay for. It's a thankless and difficult job. So I was burning the candle at both ends, to be honest. It was just too much. So YouTube is great. Twitter is great. I can come and go as I please on both platforms without anybody getting on Discord mic and going, Mike, I have interesting questions to ask you. And I go, they are interesting questions. I want to talk with you until my family is all looking at me sideways going, where are you? Right? Do I blame everybody else for my own curiosity? No. For my own desire to want to talk markets all the time? No. But, it's just one of those things. So, what are you going to do? And now you know the story, the rant of the TYP Discord and why I disbanded it. Mainly just myself, and, well, people are upset. There was a lot of data in there. A lot of data. There was like a library, right? It was all organized like libraries. There was Sierra chart libraries of people who had done help, and there was libraries for different psychology and trade journals and various channels and links to educational stuff. It was all organized well, and there was a lot of it. So I think people felt like, I put all the work into that. And you were able to just snap your fingers and go, poof, all your work is gone. But what people don't consider is that it all of it, the whole impetus came from my brain. And it was on me to maintain it, not on any of them. And I gave people the chance to maintain it without being a dictator. And they never took the impetus. Pump it. Pump it up. I was there that weekend when you announced the closing late at night. Yeah, I mean, there was a few people that I was telling in the months leading up to it, like, I think I'm about done with this. I'm losing my health, one. I'm losing time. And I'm really frustrated. I'm trying to give people the opportunity to moderate, and there was only, I gotta give props where it's due. There was only like 2 or 3, maybe 4 people that would do it of their own volition. So it like trying to moderate, keep everything clean and organized. It fell. Those people stepped up at the end, but then there was a whole other group of people that were like, yeah, they had been there for a year and hadn't done anything. And you know, some of them I understood why they couldn't do anything, but it was like I gave everybody the opportunity, like, step up, and I'm not gonna threaten closing everything down, but just step up, please. And nobody did. And so I don't want people to do what they're doing because I'm threatening them with the closing of something. I want them to do it because they understand the ethos. You know, and I had spent hours putting posts in the private areas explaining the ethos of what I was trying to do. Give and take, and you know, if someone puts a lot of work into something, like it. If you take the time to read it, take the time to respond and encourage someone, right? Otherwise, nobody knows that you appreciate it. We can't read your minds. But I had spent hours and hours, I mean, essentially weeks out of my life to try and create something. And people just wouldn't moderate. It's just, they appreciated what was there, but not enough to take time out of their lives to do anything about it. So if you know, here we are at TD Ameritrade VWAP, top of the bounce, potentially. Bing. Let's see if we can get rid of some of our profits, because that could happen. Yes, it could. Oh, interesting. Well, I like it, Andre. Yeah, it could happen. We'll see. All right. I like it, Andre. Above the range here. Oh, boy. Come on now. Short how many? 7? All right, there you go. All right. Oh no, the little one she's losing her mind here. Oh, here comes the trailers. We'll move them down. Bing. All right, well, hey, there's another trailer. Let's go. Trail stop. Wait a second. Here. Bing. Rainer, I'm convinced we would have a good time too. I saw it from the beginning with you, my friend. Drinking beers in a pub in Switzerland, in your beautiful, beautiful town. Anyway, made a few more shekels while stopping out up here. That's okay. Hit my targets here. So let's play with some risk. Defined. Bing! Cancel all. Hey, 5 more points. What's up, Chirp Tone? Yeah, Praiser Guide. That happens all the time, but it's okay, man. I mean, I'm going to miss out on too many shekels to the upside here, too. We have 3,000 positive tick, guys. Here, look. We'll bring this in and make it part of the crew down here. See this heads up tick? This heads up display, this HUD baby. Here's another thing. When you see on the and this goes out to well, I've always known about it, but he was one of the ones that pointed it out to everybody before I did. Vosloo. He pointed out to everybody before I could point it out, because I was doing this HUD thing and showing people about all this stuff, and he was a new guy to the inner group. He said, you know, when this NQ opening VWAP 30 seconds thing is high volume, seems like we sell off. He's right. High volume like this at the open usually produces a downtrend day. So when you guys get this thing, notice that. And when I say when you get it, when you buy it from Ticino, and buy his level 1, which I hope you do. It's just so worth it, guys. Again, I can't talk about Ticino enough. I essentially learned Sierra chart because of Ticino. Sorry, here we have a little higher. We have settlement up here at this zone. I think they are going to take some profit into settlement, but 3,900 would not surprise me. I think they're going to take some profits though. Chirp Tone, I hope that you were successful. But anyway, back to Ticino. Oh, that's interesting, Rainer. Back to Ticino. The reason I talk about Ticino's service so much is because I have so much respect for what he shared on Sierra chart that allowed me to learn it, and that's it. And he's just so freaking respectful in emails, and he's kind, and he's everything I wish I could be, apparently. Here we go. I have my brackets off. Oh well, what are you gonna do? This might be a losing proposition. Let's see. Foomp. There you go. They're taking profits, taking care of business every day. Taking care of business. A volume. Brink into that node. Let's see. The 125 lot. Ooh, I'm out. I'm not going to do this. I am not going to do this. Oh, my little girls. Getting opinionated. You're like, why did you take that off? Nope. It's a little too close to settlement. We're more than likely going to go test into this wick here. into 80 and retest 74. That's why I do it. It's the movement, man. Stops there. So we'll see. I could be wrong, but made a bad decision, so lost a few shekels, but that's okay. What's while I sit here and want to overclick, what is the chirp tone? I'm happy to hear that. Green is good. Let me just drink some water. It's really hot in this office. Really hot. And I've been walking for 3.3 hours and 36 minutes. So there you go. Ah, man. You're like, Mike, if you thought it's going to go to 74, why didn't you get short? Yeah, I don't know. I overtrade the close often, so we're close enough. 15 minutes left. But if I was feeling like water and Bruce Lee and just going with the market, then maybe I would have flung a few contracts to the short side. But I'm human. I don't really want to turn a publicly, and I say publicly because you guys are seeing what I do here on the tube. But I don't want to turn a publicly decent trading session into a really bad one and demonstrate gambling at the close. So there you go. Although we can do this. Hey, nothing wrong with the little Stream Deck button pressing. God, it's kind of like riding a bike sometimes when you're doing this little short-term DOM scalping. You're like, oh, I see momentum loss. Oh, I see the MBO. Oh, okay. Yeah, it's probably going to tick down 3, and then I'll get filled. And I can scalp out, and it'll tick up about 3 or 4 ticks, and I get out. That's what that was. Yeah, so anyway, Ticino Trader's charts are just back. It's like I never stopped talking about it. His charts are phenomenal, and I learned how to trade off of them. Or not trade. I learned how to build charts in Sierra Chart off of them. And he charges only like €4 a month, and you get access to hundreds of chart books that approximate or do better things than even Bookmap or any of these other things. So it's like, why the heck? There goes the tick. Why the heck wouldn't you pay him €4 a month to have somebody at your disposal that builds chart books, and that you'll just get access every month to all the new stuff he builds, right? He just did spreads in Sierra Chart. Can't remember exactly what he did, and I don't want to misrepresent it. But anyway, he's built all kinds of cool comparison charts, order flow charts, footprint charts that I still haven't opened up, but they're different than mine and they make sense. They actually make sense. You think about them, you look at them, you go, holy cow, that would be really useful in my trading. Except I do okay, so I'm not looking to incorporate a bunch of new things, but when I get curious on the weekend, I'm going to go in and download a bunch of his charts, and I'm going to look at them and go, cool. Right? The dangerous part of me doing that is if I start opening up his charts and forget what I learned recently from him, and then I start doing YouTube videos about them, and then it tells everybody how to build his stuff. I don't want to do that. I'm very, very cognizant of that. So most of what I show on YouTube, I avoid everything that I ever learned or that is a direct representation of his charts. So I'm very careful. I try to be very respectful of the fact that he spends all this time building these chart books and selling them for a few cups of coffee. And so I try to really just protect that. And I would do that for anybody who sold chart books and spent the amount of time that he did building all those chart books. I have massive, 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 massive respect for my Sierra chart teacher, essentially. Which is why I absolutely... Here we go. Look at the tick. You see it? Bing! Lit up down there. Bing! Again. Lit up. Bing! Lit up again. Into settlement. Foomp! What's going to happen? What's going to happen? Look at all that liquidity at settlement sitting there. Look! Hundreds! You see that? Can you take the scalp off settlement, folks? Yes, you can. Yes, yes, you can. Oh, man, I want to put some music on. Sorry, Rainer, I really want to put some music on. But I'm doing it because I'm hearing your voice. Please don't put music on your live stream. Okay, I won't. I like you, Rainer, so I won't. Look at all that liquidity. They're gonna munch it because there's stops through all that liquidity. They're gonna munch you guys. They are gonna munch you right now. Goldman, JPM, we. See how I think? We are gonna munch you because we want all that liquidity. Let's go. Munch them. Munch them. Munch, munch, munch. Let's go. Maybe not. We'll see. Maybe it's just resistance. 400 lots munched. Pay down. We munch you. Okay, thank you. All right. Now let's go get them. Munch, 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 munch. You think everybody that bought right up to settlement doesn't want to get paid? I think they do. We'll see. That's that settlement from the other day is a 40th percentile settlement, so it's not huge. T+2 is up here. That's huge. So likely just gonna munch. They're gonna munch everything all the way back up there. But we'll see. We'll see. I get it. It's a really big. I actually don't care about the parabolic move. That here. Let's use our stream deck. Here. I don't care about the fat. Oops. Oh gosh. Here we go. I don't care about that parabolic move. That is not factoring in at all to whether or not they're going to buy there now. I know a lot of people would say, oh, too high, too much, I'm going to sell, take profit. Yeah, there may be some profit taking, but in my mind, they're absorbing you all here. Right here. That's all. They're just buying it, and when they come and munch all this, y'all are just going to probably, again, as it sells down, I still think the same thing. You're probably all going to be sad that you sold above settlement. And you're going to go, damn, I should have let that runner go. So, I don't know. It is the weekend. A lot could happen. I could be wrong, but you don't see me buying here, but I want to. I want to buy here. I typically, unless you have a bunch of consolidation first, I'm not a top buyer. What do you mean by that? I don't buy without a bunch of consolidation and then seeing what I want to see. Now, is the consolidation happening really hot and heavy right now? Yeah, it is. It's happening very fast. Here, let me see if I can get this heads up display wherever it is. There it is. I needed to go window. We need to go, man, hold on. Window, I'm going to get something wrong here. Window, always on top, always visible. So it's already on, it's just not working the way it's supposed to. Whatever, heads up, doesn't matter right now. It's, we're not even above. We're like almost equal ticks here. Nicey tick, 220, nicey. NQ Amex ticks 800, 1200. Anyway, it's like we're getting a bunch of consolidation because we're getting a ton of volume very quickly, and we're coming into the last 5 minutes of trade on a Friday afternoon. I think they're just going to go get all this liquidity up here and run all the stops above. Golly, I really want to buy. I really, really want to buy. Yeah, massive respect for Ticino Trader. Anyway, he's on my tongue a lot here because, you know, I have a channel that shows people how to build Sierra chart stuff, and I want people to know that I respect the OGs from whence my knowledge comes. I don't know. I can't wait to get out there and hug my little girl. She's yelling at Mama because Mom's probably making lunch, and she's probably in the crib, and she's probably like, Mama, Mama. She's only 4 months. She doesn't say Mama yet, but she's trying to get her attention. Here it comes. I might take a trade. I might take one trade like a dummy. All right, here. Oh, sheesh. What did I just do? Let's give it away. Let's give it away. Mike is a top buyer. Yeah, look. Oh, thank you so much, Corey. I'm just turning it down. Thank you. God. Yeah, thank you. Oh, that's the comment of the day, Corey. Appreciate that. Oh, geez. See? Here, let's put a bracket on this bad boy. I really effed this all up here. There you go. One more time. Settlement on settlement crime? I know. But, you know. Hit me, baby, one more time. Here it comes. Uh-oh. Man, I hate losing over and over and over. Here I go again. Am I gonna lose again? All for this little runner above settlement? Sheesh capiche. There's too much volume up there? Nah. It's gonna go. Or not. Look at him hit the bids here. $39.10. Okay. I can handle it. I know. Sometimes you're just brutally wrong. But you know, my 2 micros are not going to be brutally wrong. I mean, if I lose here, the brutality of these micros is it's a, what is it, a 4-point stop? So 8 times 5. It's $40, Rainer. That's all it is. So whatever. That's, you know, Rainer, that's you know, and I talk about it all the time, but with trading, you want to avoid being brutally wrong, right? And how do you avoid being brutally wrong? You avoid being brutally wrong by taking too much size. You're like, but I want to win a lot. Well, guess what? That's not how it goes. There you go. Da-da, da-da. Yeah, it's not going anywhere here. You know, I mean, maybe it will go, but you would expect to really pump here. And it might happen in the last 30 seconds. Should we give it one more chance? Okay, let's give it a chance. Oops. See, there you go. It didn't do anything. It didn't do anything. It didn't go anywhere, but maybe it goes there now. I don't know. Let's buy the bid -3. Let's see if we get a fill. All right, let's go. There you go. Whatever. 125 points. Yeah, that's cool. That is so cool, Rainer. I'd love to see your live stream, my friend. Rainer, if you get yourself set up on YouTube and stream, I will watch you for a few days because I get tired, man. YouTube's especially the amount of hours I do it. It's exhausting to talk so much. Exhausting. My brain hurts a little bit, to be honest. My brain actually hurts right now trying to convey what I know through words without always having like an example on screen or explaining it very well. Oh, do they get paid here? Do they get paid here, guys? Is this where we get paid? A little higher? I don't know. Looking at it. There we go. Am I now short from, you know I stopped out, right? I stopped out of my 20 micros. Am I now short from about where I entered or last was? I was long from 39.12. Isn't the market brutal? Now that's a little brutal. Thank you, Corey. Appreciate that, my friend. Oh, I never got filled up there. That sucks. Oh, that's cool, Corey. He does it my way. That's cool, Rainer. Rapping to us. Yeah. Oh, thank you very much. Is it X? Yeah, X. I'm glad you signed up with Tishino. You will not be disappointed. He's awesome. Guys, can we flatten all this and just call it a day for 127 points? Yeah, let's do it. All right, let's do the tally for the YouTube chart title. If you guys want to tell me first, let's see. 127.68 times what? 5? My brain plus. Let's do it. All right, plus what is the Nasdaq here? Let's get this out of the way. Oh, geez, look at this Nasdaq screen. Was somebody telling me something about Nasdaq? Oh, I'm sorry. Jeez. I think somebody was. 439.03. Didn't really trade much Nasdaq, huh? All right, here we go. Plus 439.03 times 2 equals $1,500. So let's just say $1,500 for the stream. Plus M&Q futures trading. Parentheses $1,500 profit. All right. True to what is it? True to form here. So let's go live. How many playlists do we want? ES live stream playlist. There's Orderflow in here. There's footprint stuff in here. Now this is for the categorization of this video. Footprint stuff. There's NQ futures in here. There's volume profile, support and resistance. I went over that quite a bit. There's trading strategies in here. There's classical charting patterns in here. There's really no market profile stuff in here. There's really nothing on risk management today. That's it. So this is going to go into the following playlists: live streams, order flow, footprint, NQ futures, volume profile, support, resistance, trading strategies, and classical charting patterns. Now, is it all organized? Did I chop it up and do a video on where I talked about volume profile? No. It's so much work, guys. It is not. It's really a struggle to chop everything up and do all that editing. Then I wouldn't hang out with my family. So there you go. Anyway, I'm going to show you guys the 30-minute chart that I had that I was referencing, and then I'm going to get off stream after that. Okay? So let's go chart, show title bar, and here it is. Right here. Here's the 30-minute. See? 30-minute chart. That, my friend, is beautiful. And it's also why, as we come up into the 3,900 zone here, why I'm very happy from the higher time frame to short. Because you see that? You see that? You guys should be able to see what I'm seeing, which is this is the breakout, right? And this is resistance. So it's not a bad spot to get short, even though there's a rip and rally. So the higher time frame stuff, it really does help. And then this big old trend line is from the daily. See that? Daily lower trend line. You see how we're right there? And that's why I was saying earlier how we often gap off the trend line and then rip. That's why. Higher time frame. That's it. So keeps me safe from making stupid short plays down here. So I'm thinking the whole time, where do I put a reversal on? Where do I put a reversal on? Right? That's what we think. That's how we use our higher time frame stuff to keep us from being fools in the market on a day trade time frame. And why, I like to turn my edge over during the day trade time frame over and over and over and over, and I make more money than catching the lows and trying to sell the highs, which only occurs 20 or 30% of the times, right? I mean, would I love to every single time there's a major low end, catch it full size, 15-to-1 R's, and I'm able to brag about I caught the low and sold the high? Would I love to do that? Yeah, I'm pretty sure if you love witchcraft and wizardry, you'd all love to be Harry Potter. Not real life. Not real life. So, but I'm sure your local furu will say they caught the bottom and sold the top. And with that, I bid thee farewell. Have a great weekend. Maybe I'll do some charting Saturday or Sunday for the upcoming week. If not, it means I'm hanging out with my family. For everybody that donated in the chat, I'm writing your names down. I will go back and I'm happy to answer a few more questions to you guys, and I really appreciate I really appreciate GP, the donation. That's just so, and Andre, and Media Brewer, and Brian. You guys are Davila. I really appreciate it. You guys are awesome. So, and I'm glad that you guys are seeing that I'm giving you value. So, yeah, please like, share the video. It does help. And Corey, you guys are awesome. So, thank you for sharing this time with me in the futures markets today. Trying to stay green every single day. It's not easy. You guys know how it is. It's trading is hard. Anyway, have a great weekend. Once again, you guys don't know. I'm bowing. I'm saying thank you. Appreciate it. Have a good one.